Good afternoon, everybody. We're about 8 minutes out of getting started. If you can hear me and the sound is good, and you can see my screen that says Top Traders Share Strategies for Q4, please type in that you can. Say yes. Thank you, Victor. And Brad and Markian, thank you. Thanks, folks. Okay, so it's going to be about 10 minutes, 7 minutes, and we'll get started. We appreciate you coming in a little bit early. We have a great lineup for today, so bear with us, and we'll be getting started very soon. Good afternoon. I'm Sherry, your host for today's Trader Exclusive webinar. We are talking about the top traders are sharing strategies for Q4. And our presenters today is Hugh Grossman, Mark Sachs, Dmitry Pargamanik, and Dan Passarelli. Please check our website, tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. This is also where you're going to be able to find the recording of today's webinar. Take note, today's webinar will be uploaded and it will be available later today or tomorrow. And before we get started, I have to share a quick disclaimer. And we need to do all of our housekeeping. So you should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. And first off, for today, we'd like it if you can take notes and write your questions down so that we could take them at the end of the presentation. But if I feel like the questions, you can write them in the questions box. And if I feel like they're going to lose context, I will pop them over to our speaker. But first of all, I'd like to introduce to you our first panelist is Hugh Grossman of DayTradeSPY with his presentation called Learn to Trade While Stuck at Home. That should be a pretty great presentation. He's the head trader. His biggest passion is family. Next up, his options trading training business, which he fell into quite by accident when associates insisted on knowing what he's doing to earn a great income despite downturns in the economy. So Hugh turned his focus on teaching his amazing strategies that enable others to demystify options trading, turning losers into modest, consistent winners. So he's got many years of experience and he never forgets his roots. He's a compassionate trainer who understands your concerns, be it a beginner or an expert trader, and he's trusted to provide you with honest answers to your pressing questions. So Hugh, welcome to the panel. Thank you for coming on for the Traders Exclusive webinar, and take it away.
Thank you so much, Sherry. You know, I really applaud you for what you're doing here and the technical issues. I mean, trying to get through all this. I mean, it was awesome. And just so you know, folks, it wasn't that, Sherry, that we were late. It's that they were all early. What do you think?
So, there, I agree with that. I agree with that.
You know, we got a real
sometimes things just take a little longer, though.
Oh, yeah. So, but I'm really excited to be here. And I think if I share my screen, let me just see here. We should make this thing work.
There we go. Learn to trade while stuck at home.
There we go. There we go. All right. Good afternoon, everybody, or good morning or good evening, depending on where you are and when you're watching this. My name is Hugh. I'm the head trader, as Sherry just so eloquently just told you. So here's what we're going to do here right now. I'm going to talk about just 4 little things here. I'll give you a little bit of an introduction to options, and then I'm going to give you my little opinion on outlook for SPY, what's going to happen in Q4, some of my favorite trading tips, and I actually have a gift for you just for hanging out here with us for the next 45 minutes. And it's going to be pretty exciting. I also suspect if this webinar is a lot like so many others, that there are a lot of people who are new to options, perhaps maybe just kicking the tires still, don't really know what they are. So we're not going to get into too many technical issues because I don't want to chase you away yet. so I'm going to tell you exactly. First, I'll give you a little bit of a background on myself and how I stumbled on this whole thing, which is really what it was. And then we'll talk about how I zoned in on this laser beam strategy that just really, really works well for me. So again, thank you very much for Sherry and Traders Exclusive webinars for allowing us to present this. I think without companies like that, it would make it much harder to get our word out to so many of you out there who are actually looking to get into trading. So just a brief background on myself. I used to be an internal auditor for a major insurance company. And like all good salaried employees, I would sock away a good chunk of my money to my financial guru, who of course they all come on as your friend, right? And they're gonna do you well in your retirement. You'll have nothing to worry about. And then by the time I realized just what was happening, I guess I was neglectful. I will take the full blame for what happened to my retirement savings funds. But by the time I realized what had happened, I had lost about half my capital. So I called up my guy, Mike, and said, what's going on here? Okay, I should have been on top of it. And ironically enough, as an internal auditor, you think that I would have been. But as it turned out, I had lost about half the money with this guy. And naturally, I was quite upset because I had entrusted him to my financial future. So I said to him, well, listen, I know a couple things. That was actually a real awakening that day, real epiphany. And let me tell you what happened. So that day I realized a couple things. Number one, nobody cares or should care more about my money than me. And that applies to each and every one of you too. The other thing I realized at that point was that, look, I'm not, I'm not alien to risk or numbers. This is what I do all day, every day. This is what I look at. And I'm not that stupid. I mean, surely I can learn this stuff, right? And so I figured that, well, with the power of the internet, we all have the information at our fingertips, just like anybody else. So why can I not learn how to do this myself and manage my own accounts? And at least, if nothing else, I will be able to take full responsibility for my own actions. So I promptly asked him to, no, let me rephrase that. I commanded him to cut me a check for whatever is left. And obviously I'll be by the next day to pick it up, and I have to learn how to do this myself. And so I did. And I embarked on many courses and different things. And oh my gosh, there's so many courses and different things out there. You have to be really careful, because most of the courses that I went to, there's more of an upsell, and their idea was to actually, sell the courses. And of course, I spent a lot of money learning this stuff. But a couple of these sessions, these hotel room sessions, where you're going, you're locked up for 3, 4, 5 days. I actually got kicked out of a couple. maybe you'll know me as the guy in the back that asked that question, that famous question. So, Mr. Presenter, you trade your strategy that you're espousing on us? And invariably, they all said, "Oh no, I don't trade. I'm just the presenter." And that's all I need to know. Close up my books. I am so out of here. If you're not trading your strategy, why should I? Anyway, I did learn a few things, and I started with equities. I looked at futures, forex, a few things like that. But I kept coming back to this thing called options. And then within the options sphere, I discovered SPY. And I'm going to go over as to why SPY. And many of you obviously know what we're going to be talking about here, so I'm going to ask for your indulgence for the benefit of those who don't know. So we trade options on SPY, SPY. That is the symbol. It's a spider that tracks the S&P 500. Essentially, where the S&P 500 goes, that's where SPY is going to go. All right. It's one stock, one strategy, 1 hour a day for some pretty outstanding gains that I generally like to make. Now, that is the underlying premise. The reality is, of course, I like to stay in the market a little bit longer, and I do trade with other people now and help people and do training and everything else. But I really have control of my life now. And that is one of the benefits about trading at home, and now that you are stuck at home. So over the years, and we've been doing this now for over 10 years, we figured out what works and what does not work in both trading and training. And I think that's really important to know. So I'm going to talk a little bit about SPY and why SPY. SPY is the greatest tradable instrument out there as far as I'm concerned. And why now, and I'll tell you about that in a little bit too. But here's why SPY. SPY is the stock. It tracks the top 500 stocks. So what this is that, all the good cream of the crop stocks are there. Now this chart here, and it could have changed in the last few days, but it has Apple up there as the top, and there it is by weight. So we're talking about by weight. So in the overall basket of the top stocks, Apple holds about 7% of the entire weight, followed by Microsoft just under 6%. We've got Amazon down there, Facebook, Alphabet, which is actually Google. They have 2 classes, and further down the line. Okay, so anything that you want to trade, it's there. Please just promise me you will stay away from penny stocks. You don't want to get into that. Stay with the good quality stuff. So people sometimes ask me, why don't you diversify? And I say, well, I can't think of a more diverse stock than SPY, because as you can see here, all sectors are represented in SPY. You've got your communications, consumer discretionary, you've got it all, energy, healthcare, industrials, materials, everything is here. And it's nicely distributed. So theoretically, if there is a major disaster with, say, something like Netflix or whatever, it and of itself should not completely disrupt the S&P 500. Now, of course, should something happen to Netflix, there's probably, something major underlying that is occurring, and it's going to take some other stocks down with it. But at least you know that we are very, very diversified, and that's really what's really cool about it. Just as a little step back too, I mean, I used to be part of other groups and different things, and I'm sure like many of you, I would have I would be assigned a sector, for example, to track and watch, and we'd get on a, say, a Sunday night and a Monday night, Tuesday, Wednesday, every day, all day, all night. I would be consumed with my responsibilities in these various groups to check sectors, check stocks, check different things. And oftentimes I think most of the people in these groups didn't even know what to look for. Goodness knows I probably didn't either. And we didn't really quite know what to look for, what's coming up. And in this day and age, I don't think anybody knows what's coming up. I mean, you see what's happening here. Yesterday, for example, President Trump tweets that we're just going to hold off on the stimulus package until after the elections. Suddenly, SPY dropped what, $9, and then he tweets again, oh well, we're going to come out with this thing for $1,200 as a one-time stimulus, and then of course SPY shoots back up. I mean, it's a crazy market, and there's nothing predictable about it. So that's why it's really important to know what you're doing in this business in many facets and in many different ways, not just pick a stock and go long term. That really doesn't hold anymore. Folks, I love SPY because it's actually the most liquid stock out there. Millions of shares are traded every day. As an example, this is yesterday. We had over 90 million shares traded between 9:30 and 4 o'clock. And you can actually come in and control with an options trade. You can actually control 100 shares for about $300. Actually less, you can even trade more, whatever, but there are options that are available for a very reasonable amount of money. So it's actually affordable to most people. And I'm going to explain this to you. Something else I want to backtrack for a second. While I was learning this, folks, and I want to tell you that no trader, all right, no trader is a born trader. Nobody is a born trader. We all go through this. And I don't know what the number is. Some people say 95%. I've heard even higher, that most traders fall out of the market within the first year simply because they lose their money. They don't know what they're doing. Now, there are never any guarantees with any program. I don't care who it is that you're looking at. Nobody has a guarantee, or should have a guarantee, because nobody knows what the market's going to do. Nobody's going to know what you're going to do. We all come in with different risk levels, different risk factors, different capitalizations, even the way we interpret markets, okay? So now when I was learning this, I had actually thrown in the towel probably a dozen times, as I'm sure many of you have. But I kept coming back to this thing called SPY, and I would pore over the charts and pore over these columns of numbers for hours at a time. My wife would come in and say, well, what are you doing anyway? What is it that you're staring at? You're just so entrenched in this stuff. And I say, well, take a look at this. And I'm showing you here as an example. And every day this is like this. You see the low and the high. It doesn't matter which option it is. Low and the high. Look at this. It hit a low this day of 2 cents and a high of $1.30. It hit a low of 1 cent and a high of 70 cents. And down the line. This is just a small sample. But every day it does this. And it doesn't matter on which option. And at this point, for you newbies, I should mention that options, you only have to know 2 of them. If you expect the market to go up, you would buy a call option. It's called a call option. These are actually contracts. If you expect the market to go down, you would buy a put option. Call up, put down, okay? What is an option? Very briefly, it's just a contract with an options holder that enables you to trade a certain stock, underlying stock, for a certain price by a certain date. Don't get too wound up in the definitions. Just know that options are just the greatest tradable instrument out there. That's all you have to know. It's very exciting trading. It can be very profitable. Now more than ever, why trade SPY? Why work from home? Well, first of all, I'm very excited to say, very happy for myself, very saddened for many other people out there and many of our clients who had other businesses. I mentioned the word had, maybe they still do. But a lot of people have been hit by COVID, and it doesn't have to be just an employee. A lot of business owners I know have been hit by COVID. Even know of some dental offices, people that make braces and was it orthodontics, I guess. They're saying they were not an essential service, so they are not propped up by any government. It scares me a lot, actually, folks, the way it's going on here, because now that governments have actually set the precedent in that they are able to close down businesses just like that, it scares me that even if I were to get into a business, I'd be very concerned that somebody who is not in my business or knows anything about what I do has the ability to actually close me down and impact my ability to make money. And as I'm sitting here thinking about it, I remember, I guess it was about 3 or 4 weeks ago, I had a grown man cry to me. He said, listen, Hugh, I've been in the restaurant business all my life. At 18, I joined my family business. It because the restaurant business is a good business. We have people every day, upscale. Suddenly we're closed for months. I don't know what else to do. I can't live on $600 a month or a week or whatever it is. It's just, and what do you do when a grown man cries? But anyway, as a trader, we are not subject to those conditions. We can actually trade. We can trade from anywhere at any time. You can work from the safety and comfort of your own home, and I don't know how cool that is, but we've been doing this for a very long time. So COVID shutdowns had not affected us traders, and this gives you the perfect opportunity to actually get into a skill like this now, something that you can do from the comfort and safety of your home. You don't have to wear masks. In fact, you don't even have to get dressed for all you care. You know, you can come down in your shorts and trade in the morning for an hour or so, go back to bed. I love this business because you can work whenever you want, as much or as little as you want. There's never punching of a clock. You're never going to be beholden to anybody, whether you're there or not. Nobody knows, nobody cares. You essentially have no overhead or inventory to maintain. I can't think of a worse business than to have to buy some inventory and then sell it, especially to your friends and family, process it, store it. You know, you have no employees or government agencies to appease, nor no customers to procure. Your market is right there. Literally a keystroke away, there's your market. You don't have to service any customers or try to collect from them. Oh my goodness, the horror stories I'm hearing now. I don't have to tell you that. You can start with a little capital and have an unlimited potential earning, which is amazing. And that's what I love about this. And you're actually rewarded for your skills. That is so cool. And actually you have favorable tax concessions as well. That is the reason to trade SPY options and to trade them now and to learn how to trade them now. There's something else that I did not even mention in that list, and that is something really important. That is that when you learn the skill, ladies and gentlemen, you can actually transfer this to your kids. I have a son and a daughter. They both trade. They both know how to trade. And when my daughter graduated from university in marketing, she decided, what do you think she decided to do? Well, I think I'll go teach English in Thailand for a year. Oh, really? Well, I used to have brown hair.
Can I use your phone to call your Arlene Pediatrics?
That's not coming from my end. Sherry, if you can mute your mic, please, or somebody. So what happened was my brown hair turned white that year. And then she came back, and I was pretty excited. She came back, never been to Thailand before. And then what did she do? Well, you know, I'm going to go to Peru for another year. Oh my gosh, I started losing my hair. But here's the key. I would always ask her, Alexis, do you need any money? How are you for money? And she always, every time said, no, Dad, if I need money, I can go to SPY. The American dollar goes really far in these places. I'll go in, place some trades, come in, make my money, and get on. And in doing so, she was able to visit other countries and really kind of enjoy life for those years. And it's very comforting from my end that she knows how to do that. I don't have to worry about that. She knows how to go and shake the money to whenever she needs it. Folks, the power of options, very, very powerful stuff. Limited risk. The way we trade, and I want to stress that the way we trade, you can only lose. All right, you're only risking. You can only lose what you are putting into the trade. Now, know that option strategies, many of them have much greater risk in that you can actually lose much more. The moves we make, they're quick moves. We want to get in and out very much, and sometimes just a matter of a few minutes or even a few seconds, and we're in and we're out making our money, and that's it. The leverage is absolutely huge, and that is what I really like about this. You don't need a big move in the underlying stock to make some really serious money in the market. I'm going to give you a comparison with potential gains between buying the stock and the options. Now, let's say you want to buy 100 shares of the stock SPY. That's going to cost you about roughly $339. So you're going to be investing here $33,900. And by the way, this model is exclusive of commissions. Everybody's going to have different commission structures, so we're just going to leave those guys out now, the commissions. This is just the straight in and out of the underlying asset. But if you were to buy one contract, which actually controls 100 underlying shares, it's going to cost you, say, $464. You multiply that 464 by 100, so that option is going to cost you $464. Let's say the stock moves up $1. You now have $34,000 of equity if you own the stock. But if the option has, say, a 50 delta, which is something, don't worry about it now, but that is a Greek that is applied to the option that tells you the the option move relative to the underlying stock. So if the delta is 50, that means the option will move a 50 cents. if the stock moves up $1. So in this model here, if the stock moves up $1, the option will go up to a value of $514. Your return on investment, if you held the stock, you'd have first of all put in an awful lot of money at $33,900, and you'd walk away with a 0.29% return on investment if the stock goes up $1. If you traded the option, you'd only invested $464, and you would have walked away with a 10.8% return on investment. Obviously, once you go with options, I don't know of too many other people who go back to stocks, to be honest with you. I certainly don't. And I don't think I bought a whole lot of stocks since I discovered options. That's the way to go. What's my outlook for Q4? A lot of people ask this, Hugh, what's going to happen? I don't know what's going to happen. Nobody actually knows what's going to happen, especially with the way the markets are behaving these days and with the way the administration, we've got a lot of stuff going in. But here's the way I see it. First of all, I believe that volatility will remain high. I believe volatility will remain very high, and it will increase as we get into the presidential elections in early November. Frankly, I'm not even sure it's going to drop soon after that, because then they're going to have to, who knows what's going to happen. There might be all kinds of appeals and people wanting to count the ballots again. You know, it's anybody's guess. But I believe that volatility is going to increase as we get into early November. So that's really important to know as a trader of options. I also believe that market making news will be dominated by cyclical reports of the vaccines that are in the works and the economic lockdowns that are also going to affect the markets. Now, here's what happens, and I notice this happens with the market. When there is any hope at all for a vaccine coming out, the market reacts very, very positively to that. You'll see a jump up dollars in SPY. So it's very excited about that. And then conversely, if they say something like, oh, well, we're not going to have a vaccine in October, don't count on it, the market will drop very quickly. And that's really good to know that too. So you get this vacillation because of the vaccine. All eyes right now, folks, are on COVID. It has dominated the market now since about March in a very big way. Then, of course, the fallout from that, the economic lockdowns. And when the market sees some optimism at all, any optimism in economies opening up, it tends to get a little bit better. And as soon as there's a shutdown, down it goes, down it goes. Now, we also have, of course, this vacillating stimulus package news. Okay, they're going to pass a package. They're not going to pass a package. And so this is also very much moving markets. And I think this is going to continue into the elections. I think we may see, like Trump just announced here, I guess late last night, that we're going to see these individual stimulus packages just to keep things afloat until they come back to the table, possibly, probably at the end of the elections to see what's going on. And this is very Trump-like, by the way, for him to just get up and walk away from a bargaining table. All right, he's got a history of this. Doesn't surprise me. I mean, actually, it kind of did, but at the end of the day, it just doesn't shock me, I guess. It surprises me, but it doesn't shock me that he would do this. This is his MO, his method of operation here. So this is what he does. And this is just another bargaining chip. And this is what's going to happen. So I think we're going to see this continue. And this is going to make markets move. And you're going to see volatility increase because of this sort of thing. Okay. I think lockdowns. Now, here's the thing with lockdowns. People are always asking me and saying, well, Hugh, I don't get it. I don't get it. Everywhere I look, businesses are closing. They're going bankrupt. We've got stores that have been around, forever. Brooks, the retail, JCPenney, I mean, some people are they're really upset about this stuff. I can tell you, my mother-in-law shopped at JCPenney all her life, and she was very upset. She's, my gosh, this is a stability in my life. It's stability. I've always shopped there, and to see this is a very mentally, upsetting thing for her to see JCPenney go down and all this. So a lot of companies are reorganizing. So, well, what's going on? How does the stock market continue to go up? Well, the answer to that is simple. There's a handful of stocks. We call them the FANG stocks. This would be like your Facebook, Apple, Amazon, Netflix, Google. I think Microsoft's in there. You might want to throw Netflix, even though what's it called? Tesla. Even though Tesla, believe it or not, is not in the S&P 500, it will be probably in the next few months. But there's a handful of these stocks that are actually capitalization wise very heavy on the S&P 500. They represent about 25-26% of the entire capitalization of the S&P 500. And when you get a stock, a company that is measured in now the trillions of dollars, that's pretty major. So together, these FANG stocks are actually representing quite a big chunk of the S&P 500, and that is what is pushing stocks and SPY to record highs. All right, even during the pandemic. So what's going to happen here? I believe that with lockdowns, since this lockdown in March, I think a lot of these stocks had seen record highs day after day, and I think that's going to continue because people are going to be sitting at home. They're going to be ordering on Amazon. They're going to be watching Netflix. They're going to be on the computers, Microsoft, Google. These are all going to be obviously using Apple phones, right? These stocks are going to continue high, which are going to be pushing SPY to record highs. Yet the other 75% of market cap stocks, watch these babies drop. If you are into stocks and you're looking at some of these other companies, and I believe things like the hospitality industry, travel, tourism, leisure, retail, these will all continue to suffer, and in a big way. In a big way. I just saw an article this morning actually about cruise ships. And like Carnival, I think they sold off 12 cruise ships. A lot of these companies are very much in trouble. These ships must be, they must be filled, and they must be on the high seas to make money. And when there's no cruising going on, these ships are costing them an awful lot of money, so they're selling them. Now here's the kicker. These perfectly good ships, nobody wants them. Where are they going? They're going to the junkyard. They're going to get scrapped. This is unbelievable. You know, it's unbelievable. Perfectly good. You know, fools. The grass is still green on the golf courses. It's all just like that. They're going to get cut up for scrap metal. So anyway, you're going to see a lot of this going on, and I believe this is going to continue on. Now, here's what may happen if Trump wins the presidential election. I think some stability may set in, although you're probably going to see rioting in the streets, and that's going to continue. But the markets like stability. They want to know where things are. Whether it's good news or bad news, they still like to see that. If Biden wins, I think funds may flow out of the U.S. equity markets, and hence SPY. Biden seems to be a little more favored internationally. So either way, I think COVID will continue to be on the forefront well into next year, something to keep an eye on, okay? So how do you trade in volatile times? First of all, you have to stay positive. Stay very positive. But with that, you have to understand there's a lot of stuff going on out there. Okay, you're going to be getting a lot of emails, a lot of information, a lot of misinformation. So you have to sit back, stand back, and separate fact from fiction. Always identify a positive in your trading, in your outlook, in everything. Don't get bogged down in all the negative out there. Look for positives. And always, and this is what I do, every morning I get up, I create an attitude of gratitude. When I get up in the morning, I say, you know, thank you very much, Lord. You brought me a nice sunny day. I've got hot water, cold water running in my taps, clean. It's still, you know, it's drinkable, right? I have a nice roof over my head. I got a great family. I got gas in my cars. You know, create an attitude of gratitude, because I think that will attract other positive things in your life. This is not pie in the sky stuff, folks. This actually works, all right? And if you're not having luck doing what you're doing, try this. Stay very positive. Next up, when major events happen, you have to stop and assess the markets. Now, I know as a trader, we are really lured into being in a trade. You have this FOMO, right? FOMO, fear of missing out. It's okay to not be in a trade just because the market happens to be open. I can prove this to you on the volume. When markets several months ago got really crazy, volatility shot straight up. There's a lot of stuff going on. I was watching the activity, the trading going on, and I noticed that there was actually very little trading. The volumes had dropped right down. That told me that all the traders, the seasoned traders, the people who matter, they were sitting on the sidelines waiting and watching, saying, oh my gosh, this is not the time to get in. And the volumes that were there, I felt that those were the novices, the people that just had to be in a trade. They were paying top dollars for options. Things just weren't, and good luck. If volatility is high and you're paying top dollar for an option, really good luck with that, because what happens when the volatility gets sucked out of it, the value of your options goes down, and you could instantly lose $1 or $2 on an option, in which case you're gonna be in trouble. You could be very much in trouble. When major events, you got to stop and just sit back and assess what's going on. Do not trade until you understand the situation. Don't forget, you have some real money at stake here. Okay, you got some real dollars and cents. This is not a joke. And you're not playing with monopoly money. So whatever happens with your trading is going to affect your bottom line and your equity positions. And then enter carefully only with lower capital and lower expectations when you do see volatility going down. I think that's really important. I think then just ease into the market. Don't go crazy. Don't go into it in a big way. Prepare for more modest gains until you're comfortable with risk. Now, I say that because generally with what we do, we like to get about 6% a day. We like to get about 6% a day. And I know that markets can move huge. In fact, when I show you that other chart where maybe the low was a penny and the high was 70 cents, look, we're not trying to get $7,000 or 7,000%, I should say. Can I not get 6%? But here's the kicker, okay? When the gains are there, you may want to just, and the volatility is there, you might want to just kind of pull back your expectations a little bit until you get very comfortable with what's going on, and other traders also get comfortable, because you're actually trading other traders, okay? Not just the market itself, but there are other traders. Number 4, don't be shy to paper trade. Even if you've been trading forever, sometimes it's good, and I still paper trade a lot too, okay? Just get in paper trade, especially if you're new to trading. Now here's a real tip, okay? If you are new to trading, paper trade 20 to 30 times before embarking on real trades. Then start small with about $1,000. Still do 9 paper trades, then do 1 real one. All right, and if that worked out, then do 8 paper trades and 1 real, 7 paper trades, do 1 real. Ease into it, ease into it. Review your positions, readily identify challenges, very important. All right, you can quickly change tack in a way here so you can stay focused. All right, our aim is to stay in positions for a very short duration. Markets can change on a dime right now, and they can change in a big way. And you can blink and you're down a dime, 20 cents, 30 cents on an option trade, which is huge. And if you have a lot of money into it, it can be very, very disruptive. Okay, prepare to spend more time in cash. This is something else that I strongly recommend, because you're not going to go wrong in cash. Cash is king, and if you make small trades, small positions, and get in, get out many times a day, you can just step up. Nobody ever went bankrupt taking small gains, okay? Nobody ever went bankrupt taking small gains. So if you can do that, you're probably going to be a lot safer than if you're sitting in a trade expecting it to go like crazy and making 20, 30%. Yes, we have those days, and every now and then we still have those, but it's also very dangerous, especially if you're a new trader, not prone to risk, you're not used to risk, and you may not even understand it. You could find yourself in a very bad situation, and I don't want to see you drop out of this business just because of one bad trade. Okay, there's a lot here, and you're never going to learn how to trade, well in a 45-minute webinar. Very important. So do not feel that need to always be in a trade. Always practice safe trading and money management, and these are all things that we teach too. Just because the market is open does not mean you must be in a trade all the time. It's not a trade. And I think that is really important. So when you can get around that mentally, I think you're a lot further ahead, Folks, like so many times I said this before, and so many times we've seen this before, this too shall pass. We as a society have faced many, many obstacles in the past, some even more dire than we're at right now, and it passed, okay? Just stay safe and in both health and in the market, and you're gonna do okay. You are gonna do okay. Folks, some of my favorite tips, I'm going to give you these real quick here. Number 1, I like that little guy. I like that. He's cute. He's cute. Okay, number 1, identify clear goals in life. All right. What is it that you really want to do? Do you want to, retire early, comfortably? I think most people do. That's kind of the number 1 for me. A lot of people want to help their kids or their grandkids. That's me too. And by the way, the money we make from our trading business here goes to a lot to putting kids through school. which very much excites me. Do you want to assist in other ways? I actually have people, I have traders in my group who are very philanthropic. Is that the word? They donate huge. One gentleman, I can't believe it, Daryl. He actually builds schools in Guatemala for kids, orphan kids from hurricanes. He and this other gentleman and his wife. And what they do is they make money trading SPY. They take the money and they go down to these third world countries and they help in other ways. Whatever it is that you want, have some very clear goals in life, because when you have something like that, you can actually have something you work towards. Is it to buy a new house? I have one lady now, that's exactly what she's doing. Somebody else wants to buy, but what do you want to do? Really have a very clear understanding. If it's just to make money, that's not going to work. I know that, because if that is your goal, you're going to continue to be in the market trying to make money until you hit a snag. You're going to go down, lose it all, you're going to be gone. But if you have clear goals and a clear path, you're going to get there. And that's the next question. Identify clear goals in your trading career. How are you going to get there? And you have to create a trading plan. We use this spreadsheet that we have, and then goes to our group, and we actually have very much a plan. Every day I expect to make X dollars. Working with a lady right now, she wants to start with $300, work it up to $600. We're working with her. She's very much on track. In fact, she's even ahead of the schedule. And then hold yourself accountable. Commit to a program to get you there. Join a support group. We have this thing called the inner circle. Commit to your plan, your schedule, hold yourself accountable. And you know what, folks? If you think that this is all just pie in the sky, it's not. And you know what? If it was easy, you'd have done it already, right? That's why it's very important to get in with the support group and get some help with this. Trading plan, custom made to fit your situation. Commit to it, trade it. Not all traders are the same, therefore you cannot make a one plan that is going to fit everybody. We actually have a spreadsheet, as I mentioned, that you can tailor fit to your situation, your goals, and you have to trade it religiously. And when you hit your goals, stop trading that day. You've hit your goals. Folks, you should also engage the assistant of a coach. Take a mentor with you. Together you can achieve it. Think about it. I mean, all great athletes, all great actors, actresses, they all have coaches. Singers have coaches. Everybody has coaches. My gosh, everybody I know has a coach these days. Listen to somebody who's been there, done that. They've earned the scars. And I can tell you we've been there. As I mentioned, anybody who's been there for a very long time, you know, they know what they're doing. And if you haven't been there for a very long time, you really need somebody. Otherwise, you're going to fall out of this. All right, I'm going to just wrap it up here. We can help, folks. We have this thing called the Inner Circle. All right, it's a non-intrusive kind of a program. It's inexpensive, reliable, accurate, helpful. I'm going to give you an example. This was the Inner Circle email that goes out. It goes out every morning about 9 o'clock Eastern time. This went out yesterday. I just talked here about, it's a very brief synopsis of the way I see the market. I talked about here about what happened, all right? SPY moved into higher territory late in trading the day before here. Forward looking, I said this stock's going to largely depend on what Fed Chair Powell's speech was going to be. This was yesterday, and about his economic outlook and his views on the stimulus. Very contentious issue. I thought we could see some severe bounce during his presentation. This is something I had written, all right, at 9 o'clock in the morning yesterday morning. That said, I thought SPY may pull back to around mid 338s, 339, but longer term, continue its rise. And then this is it here. We may see some severe bounce during this presentation, might pull back, all right, long term, continue to rise. Well, here's what happened yesterday. We did pull back right down here, 339.14 in the morning, even lower, a little bit later on in the morning. And then, of course, we ran up to 342 and then a massive drop. So what we do is we send out another report, a final report as to what I actually did, including a screenshot of my actual trades. Daily follow-up report. I'm not going to read this to you, but I basically summarized what happened during the day, including what I actually did do. And that is I bought the 340 calls, once 335 calls, 337 calls, picked up 6.3% there. And here's a couple of scalps, 7 cents, 6 cents. I walked out of there with some pretty cool money yesterday, folks. All right. We also have this thing called the pick of the day in our scalping room strategies. We also talk a little bit about that. This is what we do every day in the Inner Circle. In addition, as a member, you're going to be invited to our weekly meetups Thursdays at 9 o'clock. Miss it, not a problem. It's recorded, sent to you. These meetups are interactive sessions. We talk about the trades of the day. Anything you want to talk about, concerning SPY trading. We answer your questions, whether it's about the setups, Greeks, your particular positions, any upcoming news, how it's going to affect the market. It's all there. This is what we do. Okay, very important. Folks, why trade with us? We've got the experience, the personal support. We've got value pricing and everything we do. We're approachable, accommodating. We get back to you, folks. We're of service to you. No hidden agendas, no costly upsells. We trade what we teach and we teach what we trade, and we have proven programs that work. Folks, the inner circle, you want more information, go to our website, DayTradeSPY.com. It's only a $79 a month subscription, and I got a bonus for you. A bonus because you stuck around here this long, and I applaud you. You're even gonna ring the bell. Thank you so much. Folks, if you send an email to hello@DayTradeSPY.com, I'm gonna give you a really cool ebook, Triumphs and Tragedies. And this ebook, I'm gonna tell you, talks about very, very specific stories about my clients over the years. Some of them are very tragic, others are very, very good. Thanks for joining us, ladies and gentlemen. I'm going to wrap it up. I don't think we have time for questions, but
I just had a couple of questions. Somebody wanted to know if they can get that spreadsheet. So did they just email you and ask about it? That's something they need to join up to get.
The spreadsheet comes with the packages that we sell and that we the training. So that's all part of what we do. So we do have a spreadsheet. So what happens is this, and by the way, folks, on our website, you can actually book a one-on-one session with me, okay? Free, 15-minute, 20-minute, no obligation, nothing. And let's set up something. And if you set up anything at all, we're very generous, but you got to kind of come to the party. The reason is this, Sherry, if I just take half a second to tell this. Sometimes people, they poke at the freebies, they want to get the freebies, and I get it. But sometimes having a little bit of information can be hurtful. So you really need kind of the whole package before you embark on trading options. I don't want to see anybody hurt. And for that reason, that's why we keep that and we submit that with the package that we sell.
Awesome. So if anybody has questions, they just got to email you at hello@daytradespy.com.
You got it. You got it. And we answer the questions right away. Thank you so much.
Perfect.
I don't want to leave. Okay. Good luck. Good trading, folks. Good trading.
Thank you. Bye-bye now.
Bye now.
All right. Next up, we have our friend over at Right Line Trading, Mark Sachs. He's going to show us how to exploit the key force tracked by Wall Street insiders. He's an Ivy League trained professional who graduated with a degree in applied mathematics. He's a 20-year trading veteran and professional financial analyst. He's a former full-time professor at Jefferson University in Philadelphia, Pennsylvania, and he's published over 15 peer-reviewed articles in top-tier journals. He's cast aside 99% of the useless indicators and trading systems that lead to failure in 95 to 98% of day and swing traders. His system is totally unique and based on mathematical modeling, and the software tracks the directional flow of, and this is in caps, Wall Street money. So let me just see if I can give Mark the screen. And I believe you're here. Hi, Mark.
Hey, how are you?
I'm good. How about yourself?
I'm fine, thank you.
Thanks for joining us, and take it away.
Thank you so much. Well, this is Mark Sachs from Right Line Trading, and what I'm going to do is show you our C2 trading system, and just quick disclaimer that all signals and trading opportunities provided both orally, written, or electronically are for educational demonstration purposes only. Everybody understands that trading involves substantial risk and that you can lose a lot of money. Never trade what you cannot afford to lose. Always consider your financial position prior to trading, and those of us here at Right Line are not registered financial advisors nor licensed commodity trading advisors. Now with that said, during that really kind introduction, really got a little bit of an outline of my background. But I went to the University of Pennsylvania, for 8 years, and I graduated with a degree in applied mathematics. My area of specific expertise was in mathematical modeling. I was inducted into the Phi Beta Kappa Honor Society, which meant I graduated in the top 2% of my class. I was a full-time professor at Thomas Jefferson University. The 15 articles I published are in top-tier journals. You can still Google them. Although I was a professor in the early 90s, which kind of dates me a little bit, under Sachs MK, they'll still come up. And I consider myself first and foremost to be a scientist, a teacher, and an academician. I've mentored more than 30,000 traders. I've spoken internationally in many, many countries. The last place I went to, I was invited to speak in the Philippines. I went to Manila the end of March, first week in April. Just got out just in time before COVID hit. In fact, people were just starting to wear masks at the time, and I just got back home in time, because that country has been on a really rigorous shutdown for many, many, many months. Now, I want to talk about price action and about why day traders and swing traders have such a poor success rate. And I think it really boils down to fundamentally what we've been trading for the last 50 years. And there's a lot of companies out there that will offer you to trade pure price action. And I think it's important to understand how the Japanese rice traders 400 years ago created pure price action. Now, it's still important, I think, to read Steve Nissen's books. They're just terrific, and Japanese candlestick patterns still give us some useful information, but not enough to predict how price is going to move off the right edge of the chart. And here's the reason why. 400 years ago, you had 100 kilos of rice, and you had, let's say you had 50 traders on the buy side and 50 traders on the sell side. And there was bartering going back and forth between the traders who wanted to buy and the traders who wanted to sell, and among the traders who wanted to buy as well, because they want to buy for the lowest possible price. And what Japanese rice traders did was create these Japanese candlestick patterns to tell them who was in control of the transaction at any given moment. Was it the buyers or was it the sellers? But they made a very specific supposition, a supposition that's no longer operational in the markets today. And that is that the power of each individual buyer and the power of each individual seller was equal, so that no single participant in the transaction had an overwhelming say in how the transaction was going to evolve. Now, 400 years ago, that was, probably completely accurate. But what happens in today's market? Okay, we're at market sentiment based on Japanese candlestick patterns, and we think we know the direction that price is going to move off the right edge of the chart. Then all of a sudden, one extremely wealthy buyer who has an enormous amount of money steps up into the transaction, and he's going to buy that rice or that market, and he's going to take the price straight up. And the sentiment that was present prior to his stepping into the transaction becomes irrelevant, because he dominates and he controls the direction of future price. Same thing on the other side. Some seller comes up with an enormous amount of money, and that individual is going to ensure that the instrument or the rice is going to get sold, and they dominate the transaction, and the price of the rice is going to drop. So we as small retail traders in today's market have little say in the direction that price is going to go. It's the large institutional traders, it's the big money. It's Wall Street money like JP Morgan, it's big banks, and these big banks could be any place in the world. It could be Bank of America, Deutsche Bank, HSBC, 401k plans, mutual funds, hedge funds, all these big institutional entities that can press a button on a computer, generate an algorithmic trade, and pour an enormous amount of money into the market or pull an enormous amount of money out. They're going to dominate. And what we believe the market's going to do has really become irrelevant. So if we don't track the direction of big money, we are simply going to get run over by the big institutional traders. And the big institutions love nothing more than to run our stops and take our money. That's why trading pure price action is never going to make you profitable. Now, going back, the market just consisted of a large group of small retail traders like you and I. This is maybe 50 or 60 or even 70 years ago. We each had equal say, equal throw weight. We created the trends and all the things that are operational in the market, like Japanese candlestick patterns. They worked, but not anymore. Because in today's market, here's what's going on. This big institutional marble with all that money is going to determine the direction that price is going to go in every financial market. And this is present in the futures market, the Forex market, and the stock market. Institutional money comprises over 70% of all the volume in every Forex market, every futures market, and every small cap, mid cap, and big cap stock. So we as small retail traders have almost no say in the direction that any given financial instrument is going to go. The only thing that we can do is kind of coattail right behind the direction that the big institutions are going to take price. And this is operational on every financial instrument and on any time frame. And it's irrelevant whether you trade time, tick, range, Renko, Unirenko, it doesn't matter. Because there's a universal force that moves price. Now, 90% of traders use the thought, 95 to 98%, they use pure price action, which I just showed you. They use price patterns. A lot of times they're secret price patterns. Someone's pulling back the curtain on a secret price pattern. They use Fibonacci, Elliott wave, Gann theory, divergent signals. These were all ways of determining market sentiment when small retail traders control the market. Well, when the big institutions control the market, they'll just walk through Fibonacci levels. And Elliott wave and Elliott and Gann created great mathematical formulas for predicting market sentiment in markets that were just comprised of small retail traders. When you get a big institutional guy walk in and pour money into that market, that 5-wave pattern of Elliott is going to be completely destroyed. This is why 95 to 98% of day traders and swing traders go broke. They're trading, their underlying trading methodologies are ones that worked 40 or 50 years ago, but they just haven't flexed and haven't changed the way they trade in the last 50 years. So we really have to do a major modification in how we trade if we want everything to work out. Now I want to just take a look at one pattern, and here's a falling triangle. And what you can see is that you get sequential lower highs. The anticipation is a breakout to the downside, and we get a bearish trend continuation. Now, falling triangles, rising triangles, all these things are created by us, the small retail trader. When the institutions come in, they don't care about these patterns. And that's why these have been around for 50 years. And the failure rate for day traders and swing traders is so high. And if we look, there's the falling triangle, boom, price goes skyrocketing to the upside through a falling triangle, because we as small retail traders create that market sentiment. They come in and they just blow us away. Same thing with the rising triangle. Now, the only thing I really want to add to trading price patterns is that no single price pattern has any more power than any other price pattern. If one pattern doesn't work, no other price pattern is going to work. So there is no secret price pattern that can be unveiled that's going to provide you with the ability to make millions of dollars. They simply are not going to make you money at all. Now, the one pattern I just want to mention briefly is this J hook or fishhook pattern. And the reason I want to mention it is because it creates a unique configuration that you should be aware of. Now, let's say this is crude oil prior to the outbreak of COVID. You know, all the world economies are open, everyone's using crude oil. So let's say the price is $40 a barrel. The virus hits, economies close one by one, country by country. There's a glut of crude oil, and the price takes this precipitous drop down all the way, say, to $8 or $9 a barrel. I don't know where it bottomed out at, but it bottoms out at a multi-month or a multi-year low. And then the bulls come in off of support and they start moving the market up. And what they do is all they do is succeed in creating a bull trap. And if you've been trading for a while, you know what a bull trap and a bear trap is. And institutional guys, institutional traders try to set us up all the time. What they do is they step aside, allow us as small retail traders to come in, create this J hook or fish hook, but they're not done. They're going to come back because they believe that the price of crude oil should be lower, but they want to trap the bulls into this false bottom, run their stops, and push the market further to the downside. We are never going to get caught in a bull trap or bear trap pattern again. We're never going to try to call a top or a bottom again, because those are set by the big institutions, and no mathematical formula can calculate a top or a bottom. When they're done selling, you have a bottom. When they're done buying, you have a top. And you can't tell when it's going to occur. If you try to trade a divergence signal, you're going to get run over repeatedly. If you try to trade a J hook pattern, you're going to very commonly get caught in a bull trap or a bear trap. All we can do is do one thing: trade the coattails of big institutional money and track its direction. Make big money our ally, and all the tens of thousands of other retail traders out there are our enemy, because they're the traders that we need to run over, so that when at the end of every trading session, we've made money. We're not taking from the big institutions, we're taking it from the other small retail traders. Fibonacci, again, has no predictive value anymore in a market dominated by big institutional money. So pure price action, price patterns, Fibonacci, Elliott wave, Gann theory, divergence signals. If we don't discard them, you're going to go off the cliff along with the other 95 to 98% of day traders and swing traders that have been going off the cliff for half a century. You have to change your trading methodology. And what you need to do is to track the direction of big institutional money. And what I did was create this slide, and there's that hand of big money. And again, it's Wall Street money, it's big bank, 401k, mutual fund, a hedge fund, any big institutional entity. And if they grab that candlestick and pull it up, what happened before, it's irrelevant. If they grab that candlestick and push it down with all the money they wield, price is going to go down, and everything that happened prior to it becomes completely irrelevant. So what we do is we calculate the direction of money flow, and we use our proprietary technology to do that. Now, here's the C2 trading system, and it looks pretty simple, but it's really analyzing a lot of data on a multi-time frame basis, and I'm going to show you how it works. Now, the three key metrics that determine money flow are momentum, chop, and trend. But you have to do a triple screen assessment of all of them. Now, this is just applied mathematics, and I'll explain it to you. And I'll do it by looking at the Laguerre. Now, the Laguerre is an oscillator that looks at momentum, and we know that momentum is a second-order derivation. It's not looking at speed, it's looking at the change in rate of speed. So if a race car is going around a racetrack at 100 miles an hour at a constant speed, its momentum is flat. But if it begins to accelerate, momentum increases. And if it begins to decelerate, then momentum decreases. But what is momentum in the stock market or the financial markets? It's not that price is moving faster. What it's telling us is that there's increasing selling pressure. And how do we know that? Well, the close of the candle approaches the low of the candle. That's what an oscillator is looking at, the relationship between the close and the low. And as the close squeezes tighter to the low, you know that selling pressure is intensifying, and therefore momentum is driving to the downside. The candle could be moving relatively slow. It has nothing to do with speed in the financial markets. It has to do with the relationship between the close and the low. Now, why do we choose the Laguerre? One, because there are many oscillators. There's stochastic, there's the Arun, there's the Williams K, there's percent K, there's relative strength, and probably a whole bunch I haven't mentioned. The reason we chose the Laguerre is because the Laguerre was meant to just track the direction of momentum and not look for divergence. Divergence signals for the Laguerre are completely irrelevant, and it doesn't look for them. In addition, the Laguerre formula is radically different, and we were able to change the gamma of the Laguerre and the smoothing factors to create a unique Laguerre. Now, this is kind of sort of a take-home message, whether you come aboard or you don't. Maybe too slow. I'm going to try to ignore it. If it comes up again, then I'll change something. Another thing that is very, very important to know is that no data, if an indicator assesses data from your trading chart, it will never provide you with forward-looking ability. You can't use any information from your trading chart to create a predictive decision as to which direction price is going to go off the right edge of the chart. Now, if we look at the momentum, so what we have to do, hey, I'm looking at someone's cam, that's okay. Now, what we have to do is we use the triple screen method of assessment. So if you're trading a 2-minute, we multiply that by a multiple of 3, and we get a 6-minute. We then multiply the 6-minute by a multiple of 3 and get an 18-minute. We only look at the 6-minute and the 18-minute as charts in which to accrue the data to determine how price is going to move off our trading chart. If you're trading a 5 range, we use Fibonacci because there is Fibonacci asymmetry. We look at the 8 range and the 13 range. If you're trading a 377 tick, we look at the 610 tick and the 987 tick. So we only look at the 2 higher multiple charts to make an assessment as to how price is going to move on our trading chart. And when both momentum lines are sloping up on the 2 higher multiple charts, we have tremendous buying pressure and we only have a potential long trade. When both momentum lines are sloping down on the 2 higher multiple charts, we have tremendous selling pressure and we can only trade short. And when those momentum lines are not in agreement, we have to stand aside because our number one goal is, believe it or not, is not to get winners, it's to avoid losers. If you can sidestep losers, you can trade with an amazing amount. You can trade and make an amazing amount of money. It's not about getting winners. The winners are going to hit you in the face if your number one goal in trading is to avoid losers. So there are those 2% K lines on those 2 higher multiple charts. And they show that this kind of buying pressure can only be created by big institutions. And if we don't trade long on our trading chart, we're very, very likely to get stopped at. Now we do a triple screen assessment of CHOP. Now, if we look at the CHOP indicator on our trading chart, you can see it doesn't do a very good job of assessing CHOP. It's got areas that are flat and areas that move down and up. I mean, it doesn't give us the kind of smoothing and the kind of information that we would like. But each candle has a CHOP value because although I cut it off, the right edge has an index here and is associated with the number. So what we do in order to create a really powerful assessment of CHOP, and you don't want to trade in CHOP, is to place the CHOP value of each candle on the 2 higher multiple charts. Remember, we do no looking at our trading chart. We only look at the 2 higher multiples, and we put each of those CHOP values above those candles into a 15-period SMA. And when both 15-period SMAs are sloping up, CHOP is increasing, we never trade. When both 15-period SMAs are sloping down, CHOP is decreasing, we take the trade. When the 15 periods are not in agreement, we're in control of the market, we stand aside. And here is that SMA triple screen of the CHOP index. And whatever momentum is telling us, and we know that CHOP is falling, we're going to take that trade in the direction that the triple screen assessment of momentum is telling us. Now, so this line is measuring CHOP and momentum. In order for it to go green, you have to have falling CHOP and rising momentum on the 2 higher multiple charts. No assessment is made at all of any data on your trading chart. And it gives you tremendously powerful predictive information. And you can see this up candle for a long trade, this up candle for a long trade. No short trade. We never counter trend trade. And you're only going to get this line green when big institutional money is involved in the markets. Here's CHOP plus momentum to the downside. And this down pivot, great short trade. Down pivot, terrific short trade. It's going to give you an absolute direction. Just trade a retracement and down you go. Now, the other thing that's really important is the triple screen assessment of the instrument that you're trading. Let's say you want to trade Google and you want to trade it long. Now, momentum on the triple screen is telling us momentum is rising. Chop is falling. But if we want to trade Google long, we want Google to be heading long on the triple screen assessment. We want to know what the two higher multiple charts are telling us. And the strongest down is dark pink, and the strongest up is dark green. And the assessment is done off of the triple screen assessment. And what we look at is market structure and price action. And to get this dark pink color, you really have to have Google aligned to the downside quite tightly. The 50 has to be down in red. Our 15 has to be down. And actually, we have a separate indicator that you don't see called the trend that has to be down. And that creates this pink background. And this alone has tremendous predictive power. To the upside, we have there are 3 powers, but we're only going to use the green. Cyan is intermediate, light pink is the weakest, dark green is when we trade. So, and these could be minute bars, hour bars, 4-hour bars, daily bars. The price is irrelevant. I'm sorry, the time is irrelevant. You can, like I said, you could trade tick, range, Unorenko. It doesn't matter. So now if you want to leverage an option on a long trade or an option on a short trade, you're going to be able to do that. Because part of what I'm going to talk to you about a little bit later is spending a year with me trading stocks and options, day trading them in the markets live. Now, if you put it all together, it's really, really easy. Now, this has become sort of a little bit of a cliche, actually. But that trading success equals financial freedom. There's no financial pressure. You work from home. There's no boss. There's no commute. But in essence, it's a truth. And if you trade with a lot of patience and a lot of discipline, with your primary goal being that of avoiding losers and waiting for the sweet spots to trade, you're going to get great trades fall in your lap. You're going to sidestep 90% of the losers, and you're going to make a really significant amount of money. It has to be part of your trading personality. If you overtrade, you take risky trades, you're going to walk into losers. That's what sinks almost all day traders and swing traders. You take a trader with a $100,000 account, they're going to wind up with a ton of winners. What sinks them at the end of the day is the fact that they pull in a lot of losers. So we're going to assiduously attempt to avoid every loser we can. Now, the workspace is very intuitive. It can work with any account size because you can leverage an option on a stock move. You can trade the micros on the futures, and on Forex you can just trade one lot, which is very cheap. And I love to trade with beginners because I don't have to unteach them a lot of the stuff that they've learned that just doesn't work anymore, and I don't have to push that out of their heads. Plus, they haven't been financially scarred by buying expensive software that doesn't work, that uses the old methodologies that are simply not operational anymore in the markets. So beginners are great to work with. Now, I'm going to skip that slide. I just want to give you our phone number if you want to give us a call. It's 786-732-4656. I haven't showed you the offer yet, but that's our number. Now, here's the C2 software. Now, it only is going to work on NinjaTrader 8. but NinjaTrader 8 can be powered by a multitude of platforms. If you're on Thinkorswim, Awanda, eSignal, Interactive Brokers, and a whole bunch of other platforms, they've created APIs which allow us to bring the data feed over and bring NinjaTrader 8 to life. So we will do the full setup for you. We will download Ninja for you. You're going to take your entries and signals off Ninja, but you can trade your platform. Now, I didn't want to give you the amount of money made on the trade, or the and I didn't scale these on purpose. But here's an entry. Now this is on the NQ. You have dark green background, so you know you have a triple screen alignment of the NASDAQ to the upside. There's the pullback wick. We just want a pullback. We have our 50 and our exponential 15 rising. We have our C2 indicator telling us the chop is falling, momentum is increasing. We're in here, and we can take this trade all the way to here. That's a huge move on this trade. This is a 4-unit Renko. Every candle represents 4 ticks. This is about, I would say, about a 10 to 15 point move. Now this is on the, and it's right up here. I didn't label it. This is the E-mini. You've got chop falling, momentum rising, and the E-mini aligned to the downside on a multi-time frame or multi-chart basis. Only big money can create this alignment, and you won't see this alignment often. Maybe you'll see it twice a session if you just trade the morning session of the E-mini when we trade. And there's your short trade off the pullback. There's your short trade off the pullback, and down you go. Now there's a move to the upside, and this is on bonds. Bonds are 31.25 a tick. Now you have the bracket all the way, or the C2 all the way across, but you need green background and a pullback. You're in here. And this is a nice move because it's $31.25 a tick. Now we'll look at some stocks. Here's Costco. As soon as you get the bracket, or I call it the bracket, but it's the C2 indicator, kick in to tell you that the triple screen assessment is telling us that we've got falling chop and we've got increasing momentum, and Costco is aligned to the upside with our triple screen assessment. You're going to take the first pullback long, and you're going to stay in the trade as long as the background stays green and this analysis remains present. Now I should have pulled this slide out a little bit because you lose it very quickly here. And here's a move up of advanced micro devices. And you see, I actually put the entry here wrong. You don't have the C2 indicator. You have to take the pullback or the wick underneath this signal. And then you just ride it up. Advanced micro devices is aligned to the upside on a multi-chart basis. Chop is continuing to fall. Momentum is continuing to rise. You're going to get a great long trade. And you're not going to see this kind of setup that often. I'm kind of cherry picking them for you, but this is a very specific setup. Here is a move up on Boeing. I trade Boeing a lot. I like to trade Boeing as a day trade and as a swing trade. There's your entry. The bracket is right underneath the candle. Up you go. Boeing's in a triple screen alignment to the upside. Chop is falling. Momentum is continuing to rise. And you see here the background goes clear. That's where you exit the trade. Even though you still have the C2, you need that alignment to the upside. You need that dark green background and the C2 indicator in order to stay in the trade. That would be your exit right there. Now here's General Motors, which I also trade a lot. You don't need a high beta stock to make good money. There's your entry on the first pullback. There's the indicator, the C2. There's your multi-chart alignment to the upside. And you see General Motors just left a multi-chart assessment to the downside, pink, then clear. We don't trade those, only when the background goes dark green. There's our move to the upside. You leverage this with an at-the-money call, you make a lot of money. If you want to swing trade this on a higher time frame, you can do that too. Now, last year on options, just a small number, we made it to 130,000 and we closed just above 120,000. That was in 2019. Now, everybody's going to get the rapid results quick start guide. You can set this up if you want, and you can set the software up on your own if you have a lot of technical prowess. If you don't, we will do a white glove installation for you. Now you get free lifetime updates and upgrades, which is a big deal. I mean, when we make the system better, and we're always improving everything that we have, because mathematical modeling is based on the premise that your workspace is never optimal, that you can always make it better, and ultimately try to give it the predictive value of 100%. Now, you're never going to get there, but that's what we strive to do. We strive for a perfect workspace. So we're always doing updates and upgrades, but you're never going to pay us another dime for the software.
I do have a couple of questions for you when you're ready.
Okay, great. I'm almost done, and then I really appreciate. I'll answer the questions. Now you get, and I appreciate you get unlimited VIP support. We're constantly here. I mean, Rory, Sergio has a master's degree in computer science. I spent an enormous amount of time studying applied mathematics. And Rory, Prashant, unlike most companies, you're never going to get an answering service, and you're never going to get a voicemail. If you do get voicemail, it's because all our lines are busy. But I'm here to support you as a trader. If you have a question, you are going to get it answered. And tomorrow is our master class on this software at 1:30. I'm going to show you all the nuances of how to trade it and how to really get great trades when you get the dark green or the dark pink and you have the C2. Now, I'm going to skip that. You know, I can add all this up. I'm not going to bother. Normally it's $13.97 on a permanent license. For this webinar only, it's $497. Now you get unlimited VIP support, white glove installation, free updates for life. And there's a lot of traders in this room, let me tell you. The first 10 orders get 1 year with me in the battle room. So you're supposed to get an hour of trading, but it always goes 2 hours or 2 hours and 15 minutes. That's where we focus on stocks and options. If you're not familiar with them and you don't want to trade them, maybe I can make you a convert. If it's something that you've wanted to do on a daily basis, a swing trade basis, I'm going to show you the best way to get great entries. I just entered 2 positions yesterday. We do great in that room trading stocks and options, and the first 10 are going to be in there with me for a year. The offer expires on Friday at midnight. Here's our phone number if you want to call us, and here's our Skype. Now, if there are any questions, the purchase link is in the room, and yeah, I mean, if Sherry, if you could put our link in the chat box.
Yes, I can.
I really appreciate it. And
Let me see.
if
Right.
you want me to check the questions, or should I open the box?
How
and
about
just read
I'll read them to you.
Okay, sure.
Had one person did say, Mario said, "Hi, Mark, loved your software."
Thank you, Mario.
Miranda. Yeah. And then DL wants to know, does this work on NinjaTrader 8?
Yes. In fact,
Yes,
that's
it
what it
does.
was.
That I guess yes.
Yeah, that's what it was primarily meant for. So it absolutely.
And perfect. Keith wants to know, what training do you give on how to use it? And I
Well,
think you covered that, right?
yeah, the master class is tomorrow. We're going to
All right.
spend 2 hours, 3 hours, whatever we need to do. And we're going to have ongoing educational sessions. You're going to learn how to trade this really, really well.
So we've also got someone saying, what time is the master class?
I think it's at 1:30 tomorrow. If you can't make it, it'll be on a link.
It's a call, right?
I'm sorry, it's Eastern time.
Okay. All right.
And if you can't make it, it'll be on a link and we'll send it to you.
Mario says, please let Mark know that his software has changed my entire trading career.
Mario, thank you so much. I really appreciate it. I appreciate
Steve wants to know, does this work on Fidelity Active Trader Pro?
It does not. What you're
Okay.
going to have to do is call us up and we can set you up though.
Okay.
I don't let that be an impediment, because I'm telling you, for $100 extra, we can get you set up, and we don't take the money. We will get you an account with NinjaTrader, and the $100 will just sit there forever. So
Cool.
you're not really paying it; you're kind of just parking it there.
So Steve is asking, where is the masterclass tomorrow? Steve, call the number and get it in. Get all the information.
Yeah, and Rory's going to be sending out the invitations, and if you come
Okay.
aboard, you will get an invitation.
Yeah, and everybody on this call today, not only is this webinar being recorded, but every one of our speakers will probably follow up with you in the next couple of days. So that's what I do after the webinar is over. I make sure everybody knows how to get in touch with everybody else. So thank you so much for joining us, Marcus. It was great.
Hey,
Tell Roy I said thanks. We had a lot of back and forth going on. I really appreciate all his help.
Hey, listen, Sherry, thank you so much. I really, really appreciate it.
Thank you.
I really do, and I really appreciate everybody in the room giving me their time.
Thank you. Now listen, folks, if Mark didn't get a chance to answer your question, I see a couple more coming in, but we don't have time to take them. You got to call him at 786-732-4656, and you can get your questions answered and you can get signed up for that special class. Okay, is that right, Mark?
Yes, we're here.
All right. Okay, thank you. I really need to move on. I appreciate you being with us. Thank you so much.
Thank you, Sherry, and thank everyone in the room. Thank you much.
Have a great day. Thank you.
Bye-bye.
Bye-bye. All right, so I want to remind everybody that the recording is going to be available at tradersexclusive.com. It's /archived _, which you can't see on the underline, webinars /, and you can get the recording. It'll be up either later tonight or in the morning at the latest. You can also find Traders Education, educational webinars, and our archived trader education webinars like we're doing here today. So my next speakers are from, let's see, hold on one second. I have put myself in the wrong place. I need to reopen something. Thank you for bearing with me. It's just been a day already. I want to welcome Dmitry Pargamanik and Will McBride from Market Chameleon. They're going to bring us a presentation on options, theoretical values, and payout diagrams. Let's see. Okay, you guys are self-muted. You guys can unmute yourself now, please.
Hey, sure. Can you hear me? It's Will McBride.
I can see. Yes, I can hear you, Will.
Great. Dmitry, you
And
there?
Dmitry is still muted. He's got to click himself to unmute.
All right, Dima, just click the green button in the upper right-hand corner. You there?
These are the co-founders of MarketChameleon.com, and Dmitry himself is an options market maker on the PHLX, the Amex, and the CBOE, and he created trading algorithms for electronic market making systems. And Will's going to have to give you his bio because another mistake I made this morning is I don't have it.
Yeah,
So,
Sherry.
take it away, Will.
It's me. Dmitry says he's muted by you, so you may want to unmute him. But everyone, thanks so much for coming today. We have a great presentation planned for you. Dmitry and I are the co-founders of Market Chameleon. We were market makers for 25 plus years, got our start, like Sherry said, on the floor of the Philadelphia Stock Exchange, CBOE on Amex. We started our careers as basically clerks on the PhilX, working for Timber Hill, which morphed into Interactive Brokers. Dmitry and I became friendly. We ended up going out and starting our own trading firm, traded together for, well, we still trade together today. But for the last 4 years, we've migrated to building a platform, which Dmitry's going to share with you shortly. And that platform is Market Chameleon. I suggest everyone try to bring it up during this presentation. It's marketchameleon.com. It's a free internet-based service with premium features on top, some of which Dmitry will be going through today. Dima, are you there?
Yep. Can you hear me, Will?
All right, Sherry. Dmitry is still muted.
No, I can hear him. I can hear him. I don't know why
Dmitry,
you
can
can't
we hear you?
hear him.
Well,
all right.
well,
so right now you're looking at marketchameleon.com. Let me
Sherry, can you see my
mute
screen?
myself, and I'm going to reach out and see
I
if
can
that
see
works.
Dmitry's screen, and I can hear you both.
Okay.
Will,
Then I'll just
and
start.
Will just muted himself.
Okay.
Bear with
Well,
us.
if you could hear me and see my screen, then I'm ready to go.
I can hear you and I can see your screen.
Okay. So thank you for having us today here, Sherry. Thank you everybody for joining us. I'm going to go really quickly over a couple things that are important to traders, and that's the payout diagram and theoretical values. This is going to be focusing for options traders. So hopefully you guys trade options here. And I'm going to jump into it and get into some examples right off the bat. But before I start that, I don't know if you gave a disclaimer. I just want to make sure everybody knows I'm not a registered investment advisor, neither is Will or Market Chameleon. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. So if you need professional help, call your broker. They should be able to help you answer your questions or give you guys guidance. So the two things that I want to go over is payout diagrams when we talk about options and theoretical values. So the first thing, the payout diagrams, and why it's important is because when you're a trader, the two things, what are the two things that really you want to do? You have an outlook, a specific outlook on a stock. But when you're a trader, the most important thing is what do you want to do? You want to maximize your gains, minimize your risk, right? That's always a thing that you want to be looking at. Otherwise, you're not trading. So as a trader, maximizing your profits, minimizing your risk. And one way to do that, especially with options, and when you're trading options, of course, you could have different outlooks and strategize different ways. So you want to maybe be able to visualize it and run it through different simulations to see, at different points along the graph, what are your profits, what are your losses? So I'm going to give you an example here. And this here, I went to SPY. So right now I'm on SPY options chain. And hopefully, hold on, let me just move this over here. That's in my way. So if you guys know of an options chain, this is SPY options chain here. You have the calls on the left-hand side, the puts on the right-hand side. I have over here the prices of the calls for each different strike and the prices of the corresponding prices of the puts for each different strike. And here I just selected the next monthly expiration, which is October 16th. So that's what I did. Went to the October 16th expiration. So we see here 7 trading days to go. Actually, you know what? Let me just change that. Let's go a little bit further out. Let's go to October 23rd expiration. Or actually, let me even do a little bit further than that. Let's go to the October 28th expiration. So just to have a little bit more days to expiration. So we have 15 days to expiration. And I got all these different calls and puts. So what is a payout diagram? Really, you want to see if I do this trade and if I have a certain outlook, what are my risk rewards? So an easy one is, let's just say I'm trading SPY. I'm very bullish and I think it's going to go way above the 348 strike before October 28th, right? So let's start out with an easy one and then we'll go into more interesting ones. So an easy one to say, well, what would happen if I bought this call, the 348 call for $3.32? So this is the bid and the offer of the call, 328 bid, the offer is 332. I'm going to click on this to pop up. This is going to pop out and populate that call for me. So it's assuming, well, let's assume we buy the October 28th call, the 348 call for $3.32. I'm going to load the strategy right here. And what it's going to do is show these are my risk reward, my payout diagram at expiration. So at expiration, which is for this situation, what do we pick? October 28th, right? At expiration, if the stock is lower, right? If it's really lower than this strike, the 348 strike, then we lose this $3.32 that we paid for the call. Obviously, if it goes up above the strike, it has to cover the cost of this call, 332, and then as it's going above it, basically it's profitable 1-for-1 with the stock price. So the stock keeps going up above that, and you're profiting 1-for-1. That's a very simple payout diagram for a call. Now, sometimes it's not so simple depending on your strategy, right? So before I even start putting in a little bit more options, and we're going to look at different types of strategies with different outlooks. But before we do that, I just want to go over some of these other metrics that are important to you. So here we see this is the bid and offer of that call. This is the midpoint, 330. So one thing to keep in mind, you guys probably, if you're trading options and you've been watching videos, that you want to stay as close to that midpoint as possible, right? The further you get away from the midpoint of the market, which would be considered at that moment the fair value, the more you're paying the fee to that market maker, right? So in this situation, it's not too bad. You know, if you pay the offer $3.32, 2 cents above it, it's not too bad. Of course, the wider that market is, the more important it is to stay near that midpoint. Also, we have a couple more risks here of that option. We have the delta risk. So here we have a delta of 33. For those of you who don't know what the delta is, this is the estimated price that the option will change by for every dollar change, for a dollar change in the stock price. So if SPY goes up $1 from here, then this option is expected to increase by 33 cents. If the SPY goes down $1, the next dollar goes down, this option is expected to lose 33 cents. So for the next $1 move, this is telling you the sensitivity of that option to a dollar move in the stock price. That's your delta. Your gamma, that's the rate of change your delta is going to change by when the stock moves $1, right? So if the stock is moving higher and higher, your deltas are going to start to increase. If the stock in a call option, if the stock is moving lower and lower, the delta of that option is going to decrease. This is telling you how much your delta is going to increase or decrease for a dollar change in that stock price, right? Your vega, that's important too. So sometimes maybe you guys have noticed that, hey, what happened? The stock increased in price and I have a long call, but I lost money on the call, right? Well, that could be because implied volatility went lower, right? So stock increased, I have a long call, implied volatility went lower. So even though I was right on direction, I lost money on the price of that call. Well, that's what your Vega's telling you. For how much the rate of change your option is going to change by for one implied volatility click up or down. Another thing that you should understand is your theta. So what is your theta? Well, look, when you own an option, it's not forever, right? An option, every day that an option gets closer and closer and closer to expiration, it's going to lose value, right? So an option with 100 days to go is much more valuable than an option that has 2 days to go, because there's much less time for it to go into money and for the stock to experience a much bigger move. So that's what your theta is. Your theta is if all else being equal, at the end of the day, the stock remains here, the implied volatility stays the same, your option will lose this much, 12.8 cents in value by the end of the day. So nothing moves, everything remains the same. You're going to decay, that option is going to decay. That's your theta, okay? Your rho over here, that's the sensitivity of the interest rate, right? Because remember, options also have an interest rate component. So if interest rates go up 1%, some options will increase in value, some options will decrease in value, and vice versa. So in a call, an option will increase with the interest rates and decrease with interest rates going down. So that's your rho. So those here are very important metrics, because right off the bat, you could kind of see, well, if I do these trades, what are my risks? And when you get closer and closer to trading like a professional, it becomes more and more important, because you want to know your risks and how you're going to manage them and if they're acceptable, right? So these are very important, the Greeks, and obviously once you put on positions, those Greeks are going to start changing around. So those are a couple things, these metrics to look at besides your payout diagram over here. So let's say I want to put on a different position, right? And instead of just getting long a call, right? Just instead of getting long a call, what if I want to do a call spread? And let's say that my outlook is bullish to neutral, and I feel like, you know what? I think the stock's going to go up, but not by a lot, but I think it'll drift higher. But I think that it might drift a little bit lower too. So I don't want to risk too much. What kind of strategy can I do? Well, there's two, right? Well, there's more than two, but let's talk about two. One is an in-the-money call spread or an out-of-the-money put spread, right? So maybe you guys heard of this, credit put spreads, debit call spreads. So let's take a look what I mean. Now, we know that the stock right now is $340.91. So it's right here, about $341. I'm just leaving a snapshot here. These aren't live prices. So it's about $341. Let's say that I think the stock will stick around here or go up, drift up a little bit. But I think if it goes down, it's not going to go down more than 1%, right? So this would be my outlook for this stock. So over here, I'm going to sell this. I'm going to sell this call over here. Sell that call to 337, and I'm going to buy a call underneath it. And I'm going to just pick on a strike. Let's say the 334 call. So look what I did. I did a call spread. Bought the 334 call, sold the 337 call. Let's take a look what that looks like at expiration. All right, so I'm loading that strategy. So look how much different that looks. So I'm paying $2.26. One thing I noticed right off the bat, that midpoint is kind of far away from there. It's 211. So you could always put in limit orders. Remember, see, that's the market, 195 bid, 226. You could always put in limit orders. You want to try to get it close to that midpoint as possible. Very important, because over here, it's already 15 cents away, right? So 15 cents away in a $2 strategy, you're talking about already 5%, 6% that could eat into your profits. So keeping that in mind, let's take a look at where we make money, where we lose money. So here, all these ranges over here in the green, anywhere here, we make a profit, right? So we see here, we buy $3. This is a $3 call spread. This will be worth $3 at expiration. So let's say if we pay $2.26, we're making about 74 cents, 75 cents, which is not bad. What is that, like 30% return almost, 25%? That's not too bad. Notice here, even if the stock just sits here right at the same price, right at the same price, it doesn't have to go up, this strategy is profitable, right? If it goes up, of course it's profitable because it just needs to stay above this short strike, 337. Even if it goes down a little bit, still profitable, right? As long as it stays above 337. So that's based on my outlook. If it goes down and let's say crashes because I have a call spread, this is showing me that here I'm stopped out, right? At what I paid, 226, maybe 211, but that's where I'm stopped out down here. So that's really quickly a visual on a call spread. And you could see, does this line up with my outlook, number one? And is this risk reward ratio based on my outlook acceptable, right? Is that an acceptable rate of return, which, what, 15 trading days to go, 25% return if the stock just sits here, drifts a little bit higher, right? So that's what, and obviously if it goes much lower, you are stopped out. So that's what a call spread looks like. The reverse of that would be an out of the money put spread, right? Let's take a look at a different type of strategy. Let's say instead of a bullish or even a bearish, let's say we have a neutral outlook. And what I mean by neutral outlook is I think that the stock is going to stay within a certain range. It's either going to jump out of a certain range, it's going to move a lot, or it's going to stay in a certain range. And I'm just going to pick on a few strikes here. And one, let's just say, and we'll go over some ways to help you out with this, but let's just say you think that the stock will remain, it's not going to go above, if it goes up, it's not going to go above 1.5%. So if that's my outlook, I'm going to sell this call. And let's just say to stop myself out, I'm going to buy the 350 call. Okay. So here what I did was I sold a credit call spread. Let's just take a look what that looks like. So this is a credit call spread. This is where the stock is right now. If the stock goes down, you know, I'm keeping this credit of $1.51. If it goes way up, you know, I'm gonna stop myself out at a $249 loss if it just escapes where I thought it was going. So that's what it looks like right now. So to the downside, we make money all the way. But let's say you think it's range bound and you're like, you know what? But I also don't think if it falls, it's going to fall by, what do I say here, 1.5%? Same, let's say the same distance, right? About, let's say over here, 1.4%. So I'm going to sell this put. Okay, so I'm selling the 336 put. And to hedge myself, let's buy the 331 put. Hold on a second. I got to move this out of the way. I'm going to buy the 331 put as this. So what did I just do? Now, this strategy itself is called an Iron Condor. So let me take a look. Let's take a look what this looks like. So here, all right, it's a little bit lopsided because I didn't do the strikes the same distance away. But what I did here was say that I think that the stock is going to remain within this band, right? So I picked the 336 to the downside, 346 to the upside. As long as it stays there, I will keep this credit, $2.80. Okay, that's so it's non-directional. All I'm doing is saying that it's gonna stay within this certain range, and if it does, it's $2.80. As you can see here, what I did though is stop myself out to the upside. So to the upside, I lose 120 bucks. If it goes way up to the downside, I stop myself out on 220. So that's the way. It's a little bit broken. Let me fix that actually. So what did I do here in the call? I did a $4 one. So this one would be, let me see if I could fix it so it looks a little bit nicer. Actually, I don't have those strikes available anyway. 332. Let me see if that looks a little bit nicer. So there you go. So that's what an Iron Condor looks like. Now let's say I want to stretch it out. If I want to stretch it out, I could always just say, you know what? Maybe that's not enough for me. I'm not happy with this. I'm going to stretch it out and sell. I'm going to sell it a little bit lower. Let's say I sell the 325, and I'm going to sell this call, so the 325 put, and I'm going to sell the call a little bit higher instead of 346, 347. So this here is going to stretch out. So let's see what that looks like. Load strategy. Oops. Selling. Sorry, this way. And that stretches it out. So this way, based on my outlook, I'm just going to start moving those options around to make sure that it looks that the profits, the rewards line up and the risks line up with my outlook. So that would be kind of a little bit of a broken Iron Condor. So let's take a look at a different type of strategy. This one's called a risk reversal. So a risk reversal would be something like this. Let's say I'm very bullish on SPY, and I think it's going to go above 348. So I'm going to buy that call, right? So if I buy that call, I'm hoping it goes way up above 348. At the same time, I might want to finance it. I might sell a put because I don't think it might go down that much. And I know myself, if SPY went down that much, I would probably be buying it anyway. So I'm going to go here, pick a put, maybe the 330 put, 3% away. And to finance it, I'm going to sell this put, right? So this is what a risk reversal would look like. So buying a call, selling a put. So as you could see here, if the stock goes way up, breaks that strike, I'm making 1 for 1 with the call once it breaks that strike. If it goes much lower, I sold the put, of course, I'm losing 1 for 1 with the stock, just like I own the stock, right? Just like buying the stock. But if it just sits here, the way we structured that strategy, see, if it just sits here, all the way in between these strikes, the 348 strike, the 330 strike, if it expires there, doesn't break that, we received a credit, right? We received a credit for this strategy, 15 cents. So in this situation, we would still profit that 15 cents, even if it sits here. So these are the range of prices, right? And that's the powerful thing about options, is that you don't really need, when you're buying a stock, you need the stock to go up to profit, right? Well, or if you're shorting it, you need it to go down. Here, you could profit amongst a wider range of potential prices, right, at expiration. So you could see here's the spot. You could see profits anywhere from here and really takes off above here. So that's what an example of a risk reversal, buying an upside call, selling a downside put. That's a risk reversal. Let's say another strategy that you could do that's similar to a risk reversal is buying an upside call spread. This is called a double long. Buying an upside call spread and selling out of the money put spread. So you're buying a debit call spread, selling a credit put spread with the outlook, with a bullish outlook. Okay, so let's try that. So I already have this queued up, buying the 348 call, but maybe I don't think it's going to go way up. I think it's going above 348. I'm going to stop myself out here. So let's just say, just going to pick like a 352. So I'm going to sell this, the 352 call. So you could see here, that's buying a long call spread. Buying the 348 call, selling the 352 call. I'm just getting a long call spread here. Since I already have a short put on this side, maybe I'm going to stop myself out and buy a downside put somewhere over here in case it crashes. I want to stop myself out. So I'm going to buy that 255, this put, the 325 put for 255. So let's rerun that strategy, see how that looks. So you could see here, it's a little bit choppier, but so we're paying 41 cents for this. If it goes way up, we stand to make 359. We finance some of that call spread by selling this put spread. If it goes way down, unlike the risk reversal where we have unlimited loss going down, here we're stopped out, you know, with a $541 loss. So that would be a double long, buying an out of the money call spread, selling an out of the money put spread to finance it, which would be like a double long. Of course, you could do these strategies in reverse if you feel like if you have a bearish outlook. So that's another strategy you could do. But the point I'm trying to make here is that you want to make sure that even visually, whatever your outlook is, you want to know how much do I stand to make, how much do I stand to lose, is that risk reward acceptable, right? If not, really you shouldn't be doing it. Here's another way. Now, a lot of you might know what a straddle is, right? So a straddle would be something like this. You go to the at the money, and let's say we sell the call, sell the put. And this is what it looks like. And in this situation, we want the stock to close anywhere in this range, because if we sell the call and sell the put, we sold it for $6.71. The call, we sold the put for $6.79. That's a total of $13.50. So this stock cannot move more than $13.50 away from this strike price, 341. It moves outside that, it's unprofitable for us because we got to buy that straddle back for more than $13.50. So this is what it looks like at expiration. But let's assume you don't intend to hold it all the way to expiration. You just think maybe implied volatility is a little bit high, or maybe that the stock will sit here, you know, maybe it'll for next week or so, and it will decay. So let's see what is our potential profit and here I'm going to pick a date here. What is our potential profit if the stock just kind of sits around here and on October 16th? So implied volatility is the same. Redraw that graph on October 16th. So you see that blue line here? That's telling you how much it will profit from today to October 16th, right? Not all the way to expiration, how much you stand to make just from the options decay. So even if it moves around a little bit, you still stand to make some over here just from the options decay. So that's where that blue line is compared to expiration. Another scenario, yes.
Will wanted me to ask you, can you find trace ideas in SPY?
I'm sorry, what was the question again?
It's from Will. He's not going to be able to talk at the same time that you are.
Sure.
So Will was saying, can you find trace ideas in SPY? And what are the benchmarks?
Oh, like trade ideas.
Yeah, trade ideas. Sorry. It's
right.
Okay. Trade ideas.
Right.
Sorry.
Trade ideas. Sure. So so the last thing I'm going to show you, and then we're going to go into trade ideas, is another thing that you might want to look at besides how much decay. What happens if the implied volatility changes by October 16th? So that's the next thing you could do. And let's just say you think implied volatility is a little high, it deserves to be at 18, right? So you can move both of those down, or whatever you want to do for each one. Rerun that strategy and see where that is on October 16th. And that's that blue line, that's your profit and losses, where that blue line is across the spectrum. So really quickly, using that payout diagram, you could do different things, structure it differently, and see those different risk reward levels. So Will was talking about a trade idea. So here we're going to go to SPY in the summary, and we're going to look for some trade ideas in SPY. So when we look for trade ideas, one of the things that what this is doing is we have screeners, right? So when you're looking for trade ideas, you're going to use screen. If you're a trader, especially if you're a long-term trader, you're going to revert to looking for screeners to filter out trade ideas. So this is looking at our different screeners, whether it's vertical spreads, credit iron butterflies, iron condors, and it's using our preset filters to come up with trade ideas. Now, to do that, one of the things you want to do as a trader is compare, well, what are the market prices versus theoretical value, and how much potential edge do you have in that trade, and your historical win rate. So over here, we see credit iron condor. And what this is showing us is that this is the credit iron condor. You're selling, remember we went over this, it's looking at the November 6th expiration, selling the 348 call, buying the 366 call, at the same time selling the 335 put, buying the 317 put. And I'll show you what that diagram looks like. That's selling out of the money call spread, selling out of the money put spread at the same time. Right now, the credit is $9.10. We think theoretical value, theoretically, it's worth $6.34. That's based on 6 years of historical returns. So we go back and look at how that stock behaved, given the same days to expiration with the strikes the same distance away from the strike price. We generate a theoretical value. So we think it's worth $6.34. That gives you a theoretical edge of 31%, with a historical win rate of 71%. Okay, so 71% of the time, what it's saying is that if you sold this similar spread for $9.10 at expiration, based on where the stock ends up moving, 71% of the time, you would have been able to buy back at a lower price, resulting in a profit. So you would have been able to buy back at a lower price than $9.10. So let's go over what a theoretical value would look like simplified first, and then we'll open up this chart. So I'm going to go here back to the options chain. Right. Let's go back to the options chain. I'm going to go to the October 16th expiration, 7 trading days to go. All right. And let's just pick one option. So I'm looking at the 345 call. Right, the 345 call right now is $2.58. Well, theoretically, is that a good price, a bad price? Is it high? Is it low? Well, we don't know. Now, of course, if you have a good reason to believe that this stock is going way above 345, then and if you know that, then of course you'll know if this is too low or too high. But we want to see from a historical perspective, how does this price line up? So I'm going to go over here. I'm going to click on this option, $2.58. Of course, we already went over the payout diagram. But what do we think it's worth? Right. So this here is creating a theoretical value. What is this option? What do we think it's worth? And here we think it's worth $3.33. The market is $2.55 to $2.58. So if you bought it for $2.58, theoretical edge is 75 cents with a historical win rate of 40.8%. What does that mean? So before we get into the data, let's first understand what this means. So here's what we know, that this call, the 345 call, if in 7 trading days, the stock SPY is below 345, then we know this call is worthless. It's going to be 0, right? It doesn't matter where it's below 345, this call will expire worthless. 342, 341, anywhere below 345. If the stock goes above 345, in other words, I'm hovering over here, if it increases by 1.2% or more in 7 trading days, then this call will have a value depending how high the stock gets above 345. So if the stock goes to 346, this call will be worth $1 at expiration. If it goes to 347, this option will be worth $2 at expiration. So what we don't know is the probability of that happening, right? So we don't know the actual probabilities for sure. What's the probability the stock is not going to get above 345 and stay below 345 or not increase by 1.2%? Or what's the probability it goes above 1.2%? So since we don't know this, just like an insurance company, what we want to do is ask historically, after 7 trading days, how often does SPY stay below, does not increase by more than 1.2%? And how often does it go above 1.2%, right? And by how much? That's the real question. So let's take a look at our data over here. So over here, this is the data. So we go back, right? And we ask in a 7 trading days. So we see here between October 6th and September 25th. Remember, it's looking at trading days. The stock increased by 1.9%. Well, if the stock increases by 1.9% again, that means the SPY will close at 347.48, $347.48, which means this option will be worth $2.48. Then we go back again between September 25th and September 16th, SPY decreased by 3%. Well, if SPY does that again, that means SPY will close at $330.89, which means this option will be worth 0. And we keep doing that, going back in history over and over. So what we're saying here is that in the last 71 observations, in the last 4 years, if you did the same spread over and over and over and over again, with the same days to expiration, same amount of days to expiration, and the strike the same distance away from the strike price, the average and value on average would be $3.33. Today, the market is $255, $258. So based on that, that's where you're getting the theoretical edge. Okay, 40.8%. What does that mean? The win rate. 40.8% means that historically, if you did this over and over and over again, 40.8% of the time, the stock closed high enough for you to be profitable if you bought it for $258. So over here, we see that between October 6th and September 25th, the stock increased by 1.9%. That means that this option will close at $248. So you see, even though it had some value, it would not have been profitable if you bought it for $258, right? So over here, we see 580. So between August 26th and August 17th, the stock SPY increased by 2.9% over that period, which means if it does it again, SPY would be $350.80, means this option would be $5.80. So here, this would be profitable if you bought it for $258. So that's what this 40.8% is saying, that 40.8%, almost 41% of the observations say that in the similar situation, this would be profitable 41% of the time. What about probability of touch? So here we see a probability of touch. A probability of touch is saying that, so we know that between today and expiration, what was the move, right? So in a 7-day period, this moved 1.9%. And after a 7-day period, it moved down 3%. But it also moves in between the 7 days, right? So from now to the end of 7 days, it has some volatility. So as we could see that in this period between September 25th and October 6th, the move to the highest point was 4.1%. Well, which means that at some point, this option would have been enough in the money to be profitable, right? So the probability of it going above 258 in this situation, it went high enough that this option would have been profitable at some point in between those 7 days. That's what the probability of touch is telling us, that by the end of 7 days, historically, 40.8% of the time it was profitable at expiration. 62% of the time, this option would have been profitable at any point between the start date and expiration. That's the probability of touch in this analysis. So we covered a couple things, right? We looked at looking at different strategies from the perspective of payout diagrams, and then looking at it, is it a good theoretical value? Are these good probability bets? So that's two important things you're doing as a trader. When you're trading, you want to make sure you're checking those two things. So this is one option. Of course, we could look at a theoretical value for a strategy. So let me just show this. Let's say you're doing and I'm going to come back here and look at our trade ideas. So in the summary, let's take a look at trade ideas here. And let's look at a bull credit put spread. So here, what it did was scan for us bull credit put spreads. So this has a bullish outlook, and it's telling us here, basically it's going through all the markets and saying here are the best theoretical edge trades with high win rates. So in this situation, let's take a look at the first bull put spread. It's looking at the October 23rd expiration. So if you're selling the 343 put, buying the 338 put, right now the credit is $1.98. We think it's worth $1.18 based on that historical data. That gives us a theoretical edge of 26.5% with a historical win rate of 74%. Let's move on to the next one. Here's November 4th. It's looking at the 315, selling the 315 put, buying the 310 put. That credit is 55 cents. We think theoretically it's worth almost zero. So that gives us a theoretical edge of 12.4%. And this one has a 99% theoretical win rate. So this one here, you see SPY 341. This is way out of the money, 315, 310. One thing to keep in mind, you also want to make sure you're aware of all and any events coming up. So we do have an election, right, coming up, so that can impact it. So there is that risk holding it till November 4th. Here, November 6th, also that risk. We have that election coming up, so we don't know how the market will react. But this is looking at the November 6th, selling the 314 put, buying the November 6th 310 put, $4 put spread for 48 cents. Theoretically, we think it's worth 12 cents. That's a 10.2% theoretical edge with a historical win rate of 97%. So this last one, October 9th, so that's coming up. It's looking at selling the 341 put, buying the 340 put for 39 cents. We think theoretically it's worth 33 cents. That's a 10.5% theoretical edge and a historical win rate of 67%. So if you, of course, here on the report, you could kind of click on it and read more about it. So it tells you about the stock behavior, shows you the payout diagram, explains the theoretical edge, the main takeaways, things to look forward to. So I'm not going to read all that here with you, but you could also just hit, if you want to populate that, go to the options chain. And if we hit on it, go to the options chain. Was there a question?
Yeah, we got a couple of questions, but it's also time to wrap it up. We've got one
Okay.
last speaker for everybody.
Sure.
I need to know how everybody's going to get in touch with you. And I also have, let's see, one person said, can you please share what deltas to use for different trading timeframes, but maybe they should email you about that?
Yeah, you might as well just email support@marketchameleon.com. You know,
Okay.
some of these questions might even, you know, probably longer answers than a 2-minute
Yeah.
answer. But so the website is marketchameleon.com. You can come to it. A lot of free data on the website, so you could get started. A lot of people are using like the unusual option volume report. You know, this is very big. You're going to end up paying money in other places. Here, it's, you know, a lot of it is free. People are using the pre-market report. So the service, you know, the service that goes into more detail with the historical data, theoretical values, payout diagrams, that's you know, I'll just show you the different services here. So, you know, you could start out the free service, or you could just look at, if you're just a stock trader, we have analytics on stocks. If you're like looking for seasonality, you're looking at historical, you know, how the stock acted during ex-dividend dates, you know, that's a stock trader. You're an option, that's $39 a month. Options trader, $69 a month. If you trade earnings, $79 a month. If you want the entire thing, all of them combined, that's the special offer, $99 a month. Really, we try to keep it flexible, so it's only a 1 month commitment at a time. You get a free 7-day trial. You commit 1 month at a time. We're not locking anybody in here. You know, you use it 1 month, 2 months, 3 months, take a break, come back, you know, do it again. But that's, you know, we try to keep it as flexible to traders as we can.
Awesome. Thank you so much. Now, Will wanted me to show you did talk about your disclaimer, but he also wanted me to show you the Market Chameleon is not a registered investment advisor. So we wanted to get that up on the screen. Thank you so much for joining us today, because I know we had quite a bit of difficulty getting us all on where we can hear and be heard. And so I really appreciate your time and your patience. Everybody get in touch with marketchameleon.com, and I know you'll be happy to work with them. I've got to bring in my next speaker. Thank you, Dmitry.
Thank you, everybody. Have a great trading day. Have a great day. Thank you, Sherry.
Thank you. Bye-bye now.
Bye-bye.
All right, we're going to bring up Dan Passarelli of Market Taker Mentoring with his presentation, How Earnings Trading Can Be Your Most Profitable Trade. Dan is the author, trader, and former member of the, Chicago Board Options Exchange and the CME Group. He's written 2 books on options trading, Trading Option Greeks, and The Market Taker's Edge. He is the founder and CEO of Market Taker Mentoring, the leading options education firm. Let me make Dan our presenter, and Dan, take it away. You are muted. I've just unmuted you. There you go.
Hey, thank you very much, Sherry. Great to talk to you.
Thanks for joining us.
All right, let's see here. Everyone can see my screen. Everyone can hear me. Great. How's everyone feeling today? I'm Dan Passarelli. Thanks for joining me. I'm really excited to be with you right here, right now. And today I'm going to share how you can replace uncertainty with confidence so you can profit consistently no matter what the stock market is doing, using my simple no matter what the stock market is doing, using my simple data-driven, real money proven earnings trading system that literally takes 3 minutes to trade. Now, this is what I do no matter what the market is doing, including and especially in this market right now. With the election, unpredictable news, and and sudden market swings. This market's been tough for a lot of people lately. A lot of traders I've talked to have lost money and are looking for a way to make it back. And even for the traders who've done okay or made money as the market rallied, they've now fallen victim to surprises, head fakes, and misleading narratives that make it impossible to get the results they want and the financial freedom they deserve. And it's tough lately, and it's not your fault. This is the best opportunity I know of to reclaim a feeling of control over your trading and to quite possibly make this next 6 months the best 6 months of trading you've ever had. This unique opportunity involves trading around earnings announcements, and I've cracked the code on how to do it. Since earnings season is right around the corner, I agreed to come here and speak to the Traders Exclusive family of traders and introduce how this works and give you the opportunity to take the next step and start using this system immediately. Sounds great, right? So I want to make sure you can hear me. If you can, please go to the questions box and tell me what you hope to get out of this webinar today. Please go to the questions box so I can make sure you hear me and tell me what you hope to get out of this webinar today. Let's see here. Alan says new strategies. John says how to profit from earnings. Ryan says new strategies. Okay, great, excellent. So you guys are a motivated group. Excellent. We'll cover that stuff and we'll cover a whole bunch more. These are all really great motivations for taking the next step. Before we get started, I need to point out options are not for everyone. You should read characteristics and risks of standardized options before trading. All right, let's make sure we're all in the right place. You can type the word yes if you agree with any of these questions I'm about to read. Ready? I'm here because I want to secure my retirement and financial freedom. Give me a yes in the questions box if that's you. Okay, yes, 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 yes. Excellent, great. I'm here so I can tap into a trading strategy that's immune to current market uncertainty. Is that you? Yes, give me a yes in the questions box if that's you. How about, and this could be one of two answers. I'm new to trading, want to fast track my success, or I'm already doing pretty well, but I know I can always do better. Yes, is that you? Does one of those two things represent you? Yes. And finally, this is my favorite one. For me, winning is the only option. I'll do everything necessary to protect my family and my financial future. This is where I tend to get all the yeses. All right, good. I see Ryan, I see Dan and John and Alan and Meg. Okay, great, awesome. Okay, each of us has the power within us to make trading a source of continuous wealth. Today, I'm going to share with you how to unlock that power. So this is my promise to you. I'm going to share with you how you can replace uncertainty with confidence so you can profit consistently no matter what the stock market is doing using this simple, data-driven, real money proven earnings trading system that hundreds of our students have used to go from that demoralizing feeling we've all felt at some time or another to that feeling of satisfaction and self-assurance that we all know is possible. And that's powerful. This can literally transform your life because when you're confident, you trade better. And when you trade better, you're more confident. It's this positive circle that's easier to experience than you think. This technique I'm going to share with you makes it all possible. It uses my proprietary earnings trading system. At the end of this presentation, I'll share how you can take the next step so you can start getting immediate results. Fair deal? You liking this? Yes? And by the way, don't be afraid to participate. As you can see, I ask you for some feedback every now and then. Let's make this fun, right? Also, it's important to point out that, again, you're the one with the power to make this happen. You're in control. Change comes from within. The only way to make a change is to follow through and take action. I'll help you as much as I can, just like I've done with our most successful traders. In order for you to get the most out of this, I ask for the next hour or so to please turn off your cell phone, close Facebook, all your other open tabs. If you have a busy household, maybe shut the door of the room you're in. I did, and let yourself get immersed in what I'm about to share. Your time starts now. And to keep the focus, I'm going to hold all questions until the end of the presentation. If you have a question, write it down, and I'll cover them all later. So stay until the end. I have the honor of being the last speaker, so we'll probably go a little longer than some of the other speakers. So plan on a little extra time, and I'm doing that to make sure that when you leave this presentation today, you have everything you need to move forward and make it happen for yourself. So let's keep it positive, have some fun, yeah? This is a pictorial representation of who I am and what I do and some of the organizations I've worked with. I traded down the floor of the Chicago Board Options Exchange, wrote 2 of the most popular books on option trading, worked with every major options broker in the US and abroad, as well as pretty much all the options exchanges literally in the world. And I guess if you spend enough time in an industry, you get to do some cool things. And I sure have, and I'm very grateful for that. Get to be on TV a lot and such. I'll tell you a little bit more about that later. But enough about me. Let's talk about you. Let's do a quick poll here. Go to the questions box and tell me whether you have or have not traded earnings in the past. Give me a yes if you have traded earnings, or a not yet if you have not traded earnings yet in the past. I'll give you a minute or two. Maybe Sherry can read me the results if she's able to. Give me a yes if you have traded earnings in the past, and give me a not yet if you have not traded earnings in the past. What do you think, Sherry?
Majority say yes. A few have said not yet.
Oh, okay, great.
You want some,
So
you want
here's
some numbers? Want me to count them?
No, we'll just kind of eyeball it.
Okay.
So here's the thing. If you have traded earnings, I can help you do it better and be more profitable with less risk. If you've not traded earnings in the past yet, then you're in the right place at the right time, because I'm the foremost expert on trading earnings. Now, those of you who know me know that I'm not cocky or arrogant or anything at all like that. I'm definitely not saying that because of ego or anything at all. I'm saying it because of my experience. And that alone is why you should follow other successful people in this business, because their experience proves they know when and how to take money from the market. And I'm here today to share with you exactly what I look for in my process before I make an earnings trade, and how simple it can be. And I'm not shy about saying this. And I'm also not saying trading is easy by any means, but I have my strategy down to a simple 3-minute scan that'll blow your mind. And I've taken the decision process of whether a trade is worthy of your time, money, and energy all the way down to as little as the amount of time you should spend brushing your teeth. At least I hope anyway. So today I'm going to share that process with you. Now, this is a good one. You're going to love this. Do you mind if I share a quick story with you? If I share just a quick story with you, I think you're going to like it. Great. So there I am with my little sister. This is probably like 1979 or something. A lot of kids think they want to be a doctor when they grow up, or a fireman or teacher of some sort. But for me, I wanted to be a trader, even at that age. I know it's a little weird, right? But I did. I saw traders on TV and in the movies, and growing up in Chicago, there was a lot of it on the local news. I'd see traders in their jackets down in the financial district. I'd see them on the train. It was like I was surrounded by them sometimes, you know? And it excited me to think they could make money, and good money, trading. So right out of college, I took a stack of my resumes and I went job shopping. I literally knocked on every door of the Chicago Board of Trade building, handing out those resumes, and lo and behold, guess what? I got a job. And that's where I cut my teeth. I worked my way up from a runner, which was a total entry-level position, to becoming one of the biggest traders in my pit. I started actually trading in 1998, and life was good. I was living the dream, really. I didn't know that this kind of life was possible for a regular kid who grew up in a regular old suburb, but it is. It was a great freaking time to be a trader on the floor of the exchange. Now, do you remember what was going on in 1998 You guys remember those, you guys who've been following the markets for a while? It was what? It was the internet rally, right? The internet rally? Yeah, that's what it's called, right? The internet rally? No, wait, it wasn't called that, was it? No, it was the internet bubble. And do you know what eventually happens to all bubbles? That's right, they all go pop. And for the most part, when the internet bubble burst, it didn't really look like this, like a cute little girl who'd giggle when it pops, you know. It was more something like this. Like this is basically what happened to a lot of people. And I don't really talk about this a lot, but this is kind of what happened to me. I'd never seen a crash like that in my career at that point. Back then, I didn't know how to handle it. And in some ways, I did better than some, but it was bad. It was one of the things that was the beginning of the end of my career on the trading floor. So I went into this dark time. It was really, really hard. I struggled. I wondered if I'd still have a job. And I actually wondered if I'd be able to keep my house. It was a really, really emotionally difficult time in my life. But then I had an opportunity. And it's funny how opportunities seem to come right at the right time, isn't it? And when you get an opportunity, what do? What do you do when you have a great opportunity before you? Tell me in the questions box. What do? You act on it, right? Well, like many opportunities can, this opportunity changed my life, and it set me down the path that I'm on today. The exchange asked me to come and teach classes for them, and I found that it was my calling. At that time, I started trading in a retail trading account, like everyone here on this webinar, learning a different way to trade than I was used to. And I discovered that there were strategies that I wasn't using on the trading floor, or at least not trading them the same way, that were very powerful, that could make money in all market conditions, up or down, even the most unpredictable of markets. I made it my life's work to give back to the trading community and share these strategies with all traders and to empower you however I can. Now, we had an event in Chicago with some of the traders that we trained, and we stopped in the Chicago Board of Trade where I do some of my TV interviews, and we ran into one of my friends from the trading floor. When you're watching traders on TV talking about the markets, we're there to share what we're watching, what we're trading, what's making money. Many traders make a good living out of simply playing follow the leader. Good traders don't reinvent the wheel. They follow the leader and do what works. Watch what top traders are doing and what's working now and mirror their road-tested strategies. Right? Are you following me? Yes? Is this making sense? Yes? Give me a yes. And actually taking action is important too. It doesn't matter if you have the best opportunity in the world before you. If you don't take action and make it happen, it disappears. So let's go back to some simpler days here. This is pre-market crash. Goldman Sachs was up 23% over this 12-month period. Question: would you be happy with a 23% return in a year? Would you? It's not a rhetorical question. Like, I literally want to know. I want your answers. Would you be happy with a 23% annual return? What do you think, Sherry? Tell me who says yes, who says something other than yes.
All right, let me just take a real quick look here. Let's pop that out. Overwhelming yeses. Ah, wait, no, I got one.
Who's that?
Says, no, I am greedy like Gordon Gekko.
All right, so lots of yeses, and Stephen, so Stephen's answer is a little bit interesting, isn't it? Now, I think, I think Stephen's having said no might have actually an interesting perspective. One thing to consider is, I'm talking about consistency here. Consistency is all that matters, right? Like 23% on average every year That's a sort of different question. Trading's hard for a lot of people because they rely on markets going up. But what if I told you there's a strategy that it doesn't matter if the market goes up or goes down, you can still make money consistently and potentially really good money consistently? Well, here's the big news. Traders can do better than returns like these in all markets, and you actually have to. Interest rates are near zero. That's bad for banks. The market is very volatile and hard to predict. That's bad for money managers. But do you know what saved firms like Goldman Sachs lately? Do you know? They're trading units. So look here. Goldman has 36,600 employees, average salary of $367,564, and that's counting everybody, including the interns who get coffee, right? So that is a total, this number times this number is this number, that's a total of $13.5 billion salary before bonuses, and traders work for bonuses. So in order for Goldman Sachs to make that much money and retain enough for their stock to go up 23%, they have to make hundreds of percent a year. These are the kind of trades professional traders make. That's why they make 300 or 400 grand a year before those gigantic bonuses. When I started on the trading floor, I started with a $30,000 trading account. Making trades like this daily, weekly, and monthly enabled me to turn that $30,000 well into the seven-figure area. Now that's more than 23% a year. This is what is possible. This is what traders are doing every day. So let me start off with a question. If you could consistently make money week after week, month after month, would you trade with more confidence? Would you? Again, I like participation. Let's see it. Let's hear the answers. If you can consistently make money week after week, month after month, would you trade with more confidence? Well, let me take a peek here. Okay, all right. So overwhelmingly yes, right? So in order to do that, we need consistency. We need bread and butter strategies. And those are data-driven, they're tested. And right now, the strongest consistency trade is the earnings trade. Now, there are many advantages to earnings trades. First of all, they're market independent. We don't care if the market goes up or down. They're very short term on each trade, actually less than 24 hours. I'll share more about that in a moment, which is great because that limits broad market exposure where it doesn't matter if the market goes up or down. Potentially greatly leveraged profits. And I'll show some results in a moment. There's an extremely simple yes-no test to screen trades. And the opportunities are concentrated in a short period of time. In fact, the biggest week of opportunities is in less than 3 weeks, starting October 26th. Remember that date, October 26th. That's when there are literally hundreds of earnings announcements. I like to call that Money Week because there are literally so many opportunities that week. We are at the beginning of a life-changing time to trade. So when is the best time to be prepared? If Money Week is like, less than 3 weeks away, you want to be ready for it, right? When do you want to start? Next month? No. When's the best time to get started? Fill in the blank. Tell me, go under questions. When's the best time to get started if we've got less than 3 weeks to be prepared for this? Right. Now is the best time. And the most important thing about earnings trades is that simply they work. It wasn't until I was a trader, like most of the traders attending this webinar, trading in a retail account, that I discovered the power of time spreads. Now, ironically, after trading thousands of time spreads on the trading floor and honing my skills with them, mostly in the form of risk management and execution, I learned the last 10% nuance that pushed the power of time spreads over the top for me in kind of a strange way. So this is, I don't know, maybe 5 years ago or something like that. long story short, I was found myself on the phone with Bloomberg Television with one of their producers, and he wanted me to come down to the trading floor and, stand in the pit. You've seen folks like us on TV before, and interview me, right? And so, it was the first time that anyone ever asked me to do that, and I'm not gonna lie, I was pretty excited. Like I was like, oh, this is gonna be pretty cool. And so I said, oh, great. So what do you want to talk about? And he said, well, tomorrow Apple is having earnings, and so I'd like you to give us a strategy on how to trade Apple's earnings. And it was like when they take the needle and scratch it across the record, and the whole party stops dancing. I'm like, wait, what? Because a lot of you probably don't realize this. Most professional traders don't trade earnings. Isn't that kind of surprising, right? Most professional traders don't trade earnings. And in fact, me as a market maker, my risk manager, Bob, would never let me have a position going on into earnings. So I was like, well, wait a minute, this is not something I do. Now, I didn't tell him that because frankly, I wanted to be on TV, but, I always put my money where my mouth is. If I'm going to be on television talking about a trade, it's only going to be a trade that I actually put on that I'm trading. So I said, okay, look, I'll call you right back. I ran over to my trading station and I started looking, and I was like, okay, what can I do? Buy calls? No, I don't know if it's going to go up or down. That's almost impossible to guess. Buy puts, and the same thing. Straddles, no, volatility is too expensive. And I went through all these things, and I looked at a time spread, and I was like, wait a minute, hold on a second. This is a great trade. It's so strong. I immediately put it on. Did the interview, made money on the trade, it worked like a charm, and I was hooked after that. Later, I came across some data that I'll share with you in a minute that then gave me the black and white proof that this is no fluke. When the right criteria are met, this is a genuine consistency trade that can be used over and over again to crank out consistent profits during earnings season and the next earnings season and all earning seasons going forward. Now, 95% of your trades are going to be time spreads. For those of you who are taking notes, this is a great time to start writing some of these things down. 95% of your trades are going to be time spreads. A time spread is when I buy a longer term option, I sell a shorter term option that has the same strike price. Both are calls or both are puts. Now, the data show that these usually work out great, as you'll see on the next slide, when certain criteria are met. And that is really important. I'm definitely not saying just go and trade a time spread on every single earnings play. That would be a disaster. It would not work. But when certain criteria are met, these work great. The other times when other criteria are met, we use straddles. Now, straddles are often weak when it comes to earnings because of the implied volatility buildup leading up to earnings. But when we do our yes/no test, we'll show that there are times, less than 5% of the time, when they work great. So mostly we're going to stick to time spreads. Let's look at why. So there's a lot of data here. Don't get too hung up on trying to read all the numbers. Later, I'll explain how to simplify this. For now, here's what's important. Look here. Here's what this slide shows. If you sell short-term options the day before an earnings event, they lose value greatly once earnings are announced the next trading session. Now, longer-term options also lose their value between putting them on the day before earnings and then taking them off after the announcement. But the key element of this observation is that the short-term options lose way more value than the longer-term ones. So what that means, and what this essentially proves, is that when certain criteria are met, trading time spreads around an earnings event is effectively a long-run, consistent winning strategy. As you can see right here, these are the results. Now, these are basically the steps to follow this system through earnings season. There are a few details involved, but this is basically the gist of it. So write this down. First, we find all optionable stocks that have earnings coming out after the close today or before the open tomorrow morning. Are you with me? Yes, that's important. You're following me? We can find several trades a day. Sometimes there are hundreds of opportunities. For example, the week of October 26th this year, there are literally going to be hundreds. Again, this is an extremely important week, money week. We screen those trades using the yes/no screen technique to see whether we should continue on with the potential trade. This is your first step and will literally save you hours and hours of your precious time and make your life so much better. Not to mention, it'll ensure you're only making the best trades, the ones with edge, meaning they have a statistical advantage in your favor. So your win rate increases and your winners are bigger. Do you like this? Yes? Give me a yes if you are liking this, right? Bigger winners, more frequent winners, right? So we only continue on with trades that have a positive term structure of volatility. And the greater the disparity in term structure, the better. This step is critical. This is what I did on the trading floor every day and then put it into the earnings system to make this simple for everyone to follow. So next we run the is-was check by modeling the spread on tomorrow's days with a variant vol crush on both the short-term and the long-term option based on a partial reversion to the mean, but also relative to realized volatility. And then we compare the past to get the modeled endurable gap, okay? The modeled endurable gap. That's just my way of making this basically completely foolproof in black and white for you. So then it's simple and it's super easy for you. Once you have that, you'll know exactly which trades to put on and which to stay away from. Now, here is where most people go wrong. We put on the time spread the session immediately before earnings. This is less than a 24-hour trade. That is critical. We follow the MTM proprietary earnings trade technique that I just shared and exit the trade at the precise time the following day. Everyone screws this up, but I'll share with you how you can get the timing right later. Then it's just rinse, wash, repeat. All right, so this is a trade from a past earnings season in McDonald's. So this is the time spread. Sell to open 10 McDonald's 4-day to expiration 165 calls at $1.75 and buy to open 10 of the McDonald's 11 days to expiration, so a week later, 165 calls at $2.11. So that's a net differential of 36 cents to pay for this spread. Now, the next day, immediately following the earnings announcement at the precise time, you exit the trade and you could have just simply, this trade you bought these and sold these, you just reverse it. So we sold to close the now 10 days to expiration, 165 calls, got $1.81 for those. And we bought to close the now 3 days to expiration 165 calls at $1.29. So we ended up collecting 52 cents. So the trade made 36 cents. That's 44%. So for example, if you invested in a 10 lot, right? $360 of real cash. The profit would have been $160. Now, let's make this very tangible. Pay $360. Your profit, you're selling it for $520. Profit is $160. Now, notice something, and this is important. I wanted to make this as black and white as possible, so I assumed buying the offer and selling the bid for presentation purposes. But in reality, because the bid-ask spreads were so wide, particularly on the closing trade, which is almost always the case, if I'd have used our technique of middling the markets, the profit would have been a bare minimum of about 20 cents better, which is $200 more profit on the 10 lot, or more like 100% return on this particular scenario. But again, I just wanted to show this example in a pure, unarguable way. In reality, managing the bid-ask spread on closing the trade is where most people go wrong. people leave thousands of dollars on the table every earnings season by not doing this part right. And the results I show that are sort of the worst case scenario for this particular trade are good, but they can be great. So now I want to make this very realistic and show you exactly how this works in real life when you middle the market with the MTM 25-20 middling technique. These are some screenshots of my account on an actual earnings trade I made in a past earnings season. So this is Oxy. So in the last hour of the trading day, I actually did this trade, bought to open 20 of the Oxy February 22nd expirations. This is earlier, an earlier earnings season. 66 strike calls, paid $1.49, and sold short 20 of the February 15th 66 calls at $1.31. I paid 18 cents for this time spread, or also called a calendar spread. So the very next day at the precise time, I simply followed my system and I put in an offer to sell at 30 cents. And I got filled, but I only got filled on 2 of them. So following the system, I went down, I stepped down to 27 cents, got filled on the balance, the other 18. That turns out to be a 51.7% profit in one day. That's about 279 bucks of profit in real money. Now, you know, there's a couple of you know, really, really nice trades to look at. Do they all work out exactly like that? No, every once in a while, you're gonna have a loser. It will happen. And this is one of them. You know, I just want to be transparent. So this one is another trade that I actually made. I bought 30 of the MGM Feb 15th, March 1st, 29 put calendars, paid 20 cents. The next day, it got away from me. It got away from me pretty good, but using the MTM 25-20 middling technique and just simply following the system, I was able to close it at 19 cents for a 5% loss, right? And we could go on and give a whole bunch of examples. This is another one that I traded in Las Vegas Sands, bought this time spread at 50 cents, was able to sell it in less than 24 hours at 70 cents for a 40% profit, minus commissions. It comes out to about 300 bucks minus commissions. Now, the key here is consistency, driving consistent overall profits. If you can make 300 bucks on one trade, 500 on another, 200 on another, and there are hundreds of opportunities, how much money can you make in just a single week? Seriously, again, not a rhetorical question. I want to hear it. If you can make like this kind of money, especially like during money week coming up in less than 3 weeks, how much money do you think you can make in a week? Sherry's gonna read some of the best guesses here. All right. What do you think? How much? If you can make the kind of money on the trades we're talking about, how much do you think you can make? We got some answers here, Sherry?
Looks like people are working on it. I don't have any yet.
Okay.
And anybody typing those in?
Oh, I see. You shared the questions with me, so I can read it, right?
I got one saying 50 grand. I did share a question with you. I just didn't know if it was going to lose its context, so I wanted to send it on over.
Yeah. Oh, okay, good. All right. Yeah, you just go ahead and send them over.
50 grand is the general answer.
Okay, good. I love it, man. There's nothing I like more than optimism. And so, look, this is what a consistent system can do, and this is why it's so powerful, and that's why management is so important. That's why I spend time going over it on the other slides. Management, makes sense? Like management makes money. That's the 3 M's of trading. Management makes money, right? Get it? So if you can follow a checklist, finding, analyzing, and setting up and actually making the trade is simple. I mean, anybody can do it. Closing the trade is actually really simple too by following the rules. We simply take it off the next day at the right time when certain rules are met, but it requires a little bit of nuance. And I'll share a resource to make those nuances super simple in just a moment. So bottom line is, this is a system, and that's why it's easy. Work the system, and the system works. So let's talk about realistic expectations. Well, you know, what is realistic expectations? You know, I mean, first of all, real is what you make it. You create your own reality. I mean, do you believe that you're in control of yourself? As they say, you make your own luck, right? You take the actions that make things happen, right? Do you believe that the actions you choose determine your future? Do you? And do you believe that if you don't take an action and nothing changes, that you miss opportunity, right? Profitable trading is a reality for many traders, and it's yours if you just take it. For the best, winning is the only option. We have traders in our online community chat room who are some of our top money-making traders, really successful, you know, regular folks like you and me, but the really successful who post their trades real time for all to see, who have made the decision to be profitable, to simply do it, to take that next step. In fact, I'm going to share with you in a moment how you can become a member of that chat room for free. But how often can you make trades like this? First of all throughout earnings season, there's actually thousands. Are these returns common? Yes, I literally shared like trades that I literally actually made. You can get highly leveraged returns in a short period of time with low risk. What if the trade doesn't work out? Well, risk is limited, but more important, manageable, and can be a small fraction of possible gains. Here's how to make this work. This is a simple process that anybody can follow, and timing is urgent with earnings season right here. You can make the next 6 months your best of the year and repeat that success in future earnings seasons throughout your entire trading career. And this is important. Like, earnings season is just a couple of weeks away. It's right here, right now. And that's why I'm giving this presentation today. Your timing is critical. So, like, get ready to take action now, or risk the opportunity of being gone. Now's the time. And I mean, look, like, talk about time. Your time is valuable. Do you really have years to play around figuring this out for yourself? Like, how many months or years have you spent so far? When is enough enough? When do you want somebody to simply show you what to do and do it and begin seeing immediate results? Your time is valuable every day. I talk to people who have tried to play around figuring out earnings trades, and they spend an hour or so looking at their screen and just making a best guess and basically hoping it works out. And that's time consuming, and it's also stressful, and you can't make money if you're uncertain or stressed. This earnings trading system literally takes just 3 minutes to find a trade, and it's following a simple checklist. It takes all the guesswork out, and that not only saves you time, but it reduces your stress levels so you trade better. This is the Total Earnings Domination All Access Premium Package. In this course, I'm going to share with you how to replace uncertainty with confidence so you can profit consistently no matter what the stock market's doing, using my simple data-driven, real money proven Total Earnings Domination system. And here's just some of what you'll learn: how to easily scan the market for earnings trades, where to get real-time data that pinpoint winning earnings trades, the best time of day for entries and exits, the yes-no screen technique blueprint, earnings time spread checklist for max gains and minimum losses, calculating the is-was gaps, very important, how to manage wide bid-ask spreads on closing the trade, and you'll also 100% understand how to know when the stock is more likely to outperform on its earnings announcement, how to set up profit and loss targets, how to select the optimal expirations to maximize profit potential. And then, of course, management makes money. Now, again, that's where most traders go wrong, but you'll see just how easy it can be. So you now have a new opportunity to trade more consistently using a strategy that works in all market conditions, to get a blueprint for earnings trading and watch live setups of earnings trades so you can easily follow along, to make the next few weeks your top performing weeks yet, and plus to make back losses on trades that maybe you already made. So who is this not for? Let's start there. First of all, it's not for people who are looking for a get-rich-quick scheme or gamblers. Yes, it's possible to make a lot of money in a short period of time, but I want to be clear. This is not gambling. This is not guessing. This is gaining a strong mathematical advantage and trading like professional traders. Consistency. It's like trading like a professional trader, only completely simplified into a system so anybody can do it. It's also not for people who'd rather spend time and money enduring losses to learn on their own over many years' time. Like, this is probably the most important earnings season in the history of the stock market. People are watching earnings, analysts are watching this earnings season to look to what is going to happen in the future. This is the opportunity of a lifetime now. And it's also not for wishy-washy procrastinators. But I mean, to be fair, if you can't make a decision, you have to ask your mom every time you have to, you know, make a trade or buy something, you know, you're probably not going to make a good trader anyway, right? So who is this for? Okay, this is for traders who want more consistency. This is for traders who want low risk trades with high profit potential. This is for traders who believe their success is tied to following a methodology, for traders who can follow a few simple steps. And this is for action takers. And for my action takers, I'm going to make this really, really easy for you. This is our total earnings domination 6-month all access premium package. First of all, let me share with you what you're going to get with this class. First of all, you begin with the brain dump part of the training. I'm going to put 27 years of my experience into your head with one short video. It's the keys to the kingdom. That's a $2,995 value. Why is it $2,995? Because if you can make the kind of money we're talking about consistently on daily trades throughout this earnings season and for the rest of earnings seasons this year and forever, this small one-time investment can pay you profits over and over again that can last a lifetime. And as you can see, there's no auto renewal on any of this. This is a small one-time investment. Now, I sign up for a lot of online classes just like you do. Not trading classes, but I sign up for classes so I can learn to build great courses to help you ramp up your trading fast. I know no matter how great a video class is, I'll have questions. I want somebody to show me exactly what to do. So today, you're going to get hands-on training. Starting on October 26th, you'll log in and watch me trade live in a real money account, so you'll see exactly what to do and you'll follow along with me. You'll literally see the system being traded in the live market, and you'll make your first trade with me together as a group. This is the ultimate hands-on training. We want you to have this literally mastered. So you'll also get our 4-part on-demand video master earnings trading techniques from 2 decades on the CBOE trading floor. You'll know exactly what to do every time. This puts the power into your hands. And then you'll have questions. So you're getting 6 months of the MTM community chat room. You'll be able to log in and get all your questions answered by me or our other coaches. But a huge sort of secret benefit to this is that the MTM community chat room is where our top money-making traders log in and post their trades live real time. This is an all-access premium package valued at $7,437. But I want to make this a complete no-brainer, completely irresistible, so you can immediately sign up excitedly right now. A 1,000,000-mile journey begins with the first step, and this is that step. Go to markettaker.com/TED right now, and instead of paying $7,437, right now, the first 50 of you who sign up will get this for just $497. 1, 2, 3, go. That's a massive 93% off discount. Now, why would I give such a huge discount? Because traders need help right now. And this is the best way I know how to give it. Earnings season is basically about to start. And right now is the time to prepare for it. And I want you to be one of the 1,000 trader success stories we hope to create this year. People who take action are the ones that can be great traders. That's how it works. Those of you who see a great opportunity and fearlessly act on it, you're the ones who can be great traders. So to give one more push for the people we know we can truly help, this 93% off is valid for the first 50 subscribers who join us right now. Join us at markettaker.com/TED, short for Total Earnings Domination. Enrollment is open right now. Now, here is an extra bonus that's not on the slide. I want to make sure this works for everyone. So if you're not sure if you have the background to be able to trade this simple strategy, you can. Now I'm going to make sure of it by giving you one of our most popular classes, the Options Impact video course. This is a $497 value that I'm giving you today. It's our Kickstarter series. It explains all the basics and fundamentals of options in 8 short on-demand videos to put you on the fast track to max gains for earnings season this year. Those of you who are brand new to options, you're going to watch that series first, okay? You're going to watch that series first. That's going to level the playing field, and then you're going to move on and be able to trade total earnings domination, just like the people who are very experienced. Now, this is the big one. I'm going to give the best of you 6 months access to the course that every one of our top traders has gone through. This is the MTM Trade Smart Workshop online education series. I personally teach this class. It goes beyond the basics. Each month we pick a different topic to drill down on and give you near expert understanding of it so you can achieve mastery as an option trader. For example, this month's 4-part series is called Mastering Time Spreads, which is perfect. You'll also get access to a previous month's 4-part series, Trading Option Greeks, same name as my book that I'm known for. Profit Driving Volatility Strategies is another 4-part series you'll get access to, and a whole bunch more. You'll attend one group webinar a week live, usually at 3:30 Central Time, which is 4:30 Eastern. And if you can't make it at that time, don't worry. Most of our students opt to watch just the archives, which are available for 4 months. So if you miss one, can't make it, or just want a review, they are all on demand. Now, this is a $299 a month class that we have almost never discounted. This is a $1,794 value, and that's why we're limiting this bonus to the first 27 people who join us right now at this moment in time. All right, this is great if you're new, intermediate, and even if you're very experienced. We drill down again. These are all master classes. Now look, this earnings cycle, like I said before, is one of the most important in the entire history of the stock market. Analysts are waiting to see what the earnings are going to be to give guidance for the future, and that means traders can make more money than they ever have before. This process is starting right now. Those of you who enroll today will have just enough time to get through the brain dump training of watching the bootcamp video and the masterclass to be ready for the first live class on Monday, October 26th. These are the 5 most important classes you will attend this year, probably this decade. This earnings season is the opportunity of a lifetime for those who know how to put that opportunity into action. So it's go time. For those of you who have been waiting for the right trading opportunity, this is an opportunity to change your life. Plus, you're getting access to this for 6 months, which in the past, I haven't done. In the past, I just gave it for 3 months. You're getting access for 6 full months, so you can definitely have it mastered. And in fact, not only will you watch these 5 live series, but in January, you're going to get the refresher. We're going to trade together for another full week in the most busy week of earnings season. These 5 hands-on training sessions are all 100% totally live. If you can't make it, they're all recorded also, but you'll want to watch them later that day so you don't get behind. I'll reveal all the top earnings trades of the day, each of the days in these 5 classes. And I'm going to prove that anyone can do this, regardless of experience, which is why I'm giving those 2 bonuses, or account size. So here is my guarantee to you. I'm actually trading these trades live with real money, so you'll see exactly how it's done and follow along. In fact, I'm using less than a $10,000 account to show you that anyone can do it, regardless of account size. So right now is go time. Go to markettaker.com/TED. This is Jill from Cincinnati, Ohio. She joined our class, I believe it was the last time we held this class, and on one of her first trades, she did one of the total earnings domination trades with us together in the live coaching sessions. She bought a Microsoft spread at $2.65 and in less than 24 hours sold it for $3.75, locking in a 41.5% profit. And she posted real time in the M community chat room, which you will have the same access to. The MTM community chat room is where all of our top money making traders log in and post their trades live real time. If all you got out of this class was to watch some of our top 6-figure traders posting their trades real time so you can follow along, wouldn't it be worth it just for that? Like seriously, wouldn't it? Go to markettaker.com/TED. This is David Z from South Lake Tahoe, California. Closed the last 5 at $1.41, total gain of $425 less commission. The class is paid for itself. Thanks, Dan. This is Russell K from Glendale. I'm above an 80% win. Most of the others were maybe 5% loss. Only 1% total loss out of 16 trades. Like you said, middling's really important and waiting for the bid-ask spread to normalize, which I teach in the class. Just waiting that hour made a few of the trades winners instead of losers. I took Dan's MTM trading. Oh, this is my favorite one right here. This is my favorite one. I took Dan's MTM trading course about 7 years ago in college and was my first exposure to a structured options trading strategy. He started me down the path that I'm on today. Now I'm a professional options trader at a fund. That is one of the emails that I got recently that I am the most proud of. Tyler from Lexington, Tennessee. Go to markettaker.com/TED. And oh, I see we've had some people join us. Hold on a second. Mark, hey, Mark, welcome. Congratulations. Great job investing in yourself. You know, I know like it takes a level of fearlessness and you know, aggressiveness, but that is the kind of stuff that makes great traders. Welcome, Christian. Great job. Christian from Germany. Oh, awesome. Great. Folks from the other side of the world. Alan. Welcome, Alan. Great job stepping up and investing in yourself today. Awesome. Great making that happen. Hey, Ryan, welcome. Congratulations. John, welcome. Congratulations. Adam, great job. Now, again, this is, I've got a few more names to read, which I'll get, if I didn't read your name yet, I'll get to you in a moment. This is limited to the first 50 people. And so again, welcome all you new students. I'll read the rest of your names later. Awesome. Right now, I'm going to take some questions. If you have questions about the All Access Premium package, go down to where it says questions, and Sherry will share those questions with me. Now, I'm gonna take your questions, but before I do, here are some that I get fairly often. Is this live or recorded? Both. You can attend the live earnings setup classes, but many students with busy schedules prefer just to watch the recording. I mean, look, you know, I know that a lot of people have busy lives. You know, I bet most people in this have busy lives. So don't feel hung up on, I have to do this at a certain time. Those Thursday Trade Smart workshop classes, those, most people just watch the recordings of them. The boot camp video and the master class are video recordings. You can watch those whenever you want. So even if you have a busy schedule, you're going to learn exactly how to easily identify top performing earnings trades candidates, how to set them up for maximum success, how to exit the trade for maximum profit. How long do I have access? 6 full months. You'll have plenty of time to master the system. Is this time consuming? No. In fact, It will save you time so you can spend it doing the things that, doing the things you love with your friends and family. You can spend years trying to figure it out on your own of frustration and losses, but right now is the hottest earning season you're likely to see in your lifetime. You'll be able to go through this simple course now and start seeing immediate results. How do I know I'll be able to do it? This comes with the hands-on training. You're literally going to do it together with me. I'm going to show you literally exactly how to do it. Plus, even if you're brand new to options, you're going to get our options impact videos. You'll be able to do it. Now, the number one question we get, is there a limit on the number of students who can join? Yes. Yes. We have to limit the number allowed in the live component of this package, or else it gets out of hand with questions. I want to give each of you my full attention, so we have to limit the number we let in. I have a small team committed to student success, and if you're committed to doing your part, we'll do ours, and therefore we're limited today to the first, that should say 50 people, limited today to the first 50 people, and we are on our way there. I don't believe we've got to 27 yet, so that the big one bonus is still available. Go to markettaker.com/TED, markettaker.com/TED. Let me take some questions, starting with Mark. He says, a no-brainer, a day trader who loses $500 regularly. Yeah, exactly. I mean, so many traders, try it on their own. I mean, look, the market is the most expensive teacher you can have. Okay, the market is the most expensive teacher you can have, and they're not a good teacher. They will take your money but not tell you what you did wrong, and you'll make the same mistake again. And you'll make it for years until someone shows you what to do. Like, look, with my business, when I started, when I started Market Taker mentoring, so I could give back to the trading community and help traders achieve the success that I had, I didn't know what I was doing. I didn't know how to run a website. I didn't know how to send out mass emails and how to program web pages. I didn't know how to do any of that. I tried it on my own, and it was so frustrating. Like I wanted to change the world for traders. I wanted to help thousands of traders. Our goal now is to get 1,000 success stories a year. And in the beginning, I was barely able to help anybody because I didn't know what I was doing, until one day somebody said, you know what, you can buy experience. And it clicked. I was like, why am I wasting my time trying to figure this out myself, not being able to change people's lives? And I took a class and it showed me literally exactly what to do. And now we have the goal every year of trying to create 1,000 success stories. Scott has a great question. What's the charge after the first 6 months? Here's my favorite answer to give. $0. There's no charge after the first 6 months. This is, like, as you can see here, there is no auto renewal at all. You invest 93% off today, and you get 6 months access to all of this. So great question. Yeah, I don't like to do that. George says, can someone trade SPY with this system? Well, no, this is more for single stocks, because single stocks have earnings where, SPY does not. Let's see here. Mike says, when does earnings season begin? Earnings season, like they kind of have like the baby step earnings season starting basically the week after next, where there's a few earnings, but like real earnings season, what I call money week, starts on October 26th. And on October 26th, we are all going to trade this together, your ultimate hands-on training. Mike says, are we generally short the front options in the closest expiration and long the very next period, same strike, or do we need more time? Mike, that's a little bit of involved of a question. I don't like to give the impression I'm skirting answers, but I want to give the right answer. So I'm going to tell you everything I can quickly, but it sounds like you might have a little bit of background and you would really benefit from, joining us today at 93% off. you're always shorting the option that expires immediately before earnings, but then we have to, we like to buy as close to that expiration as we can, but sometimes we have to go out into some other expirations. And we're always doing the same strike, that for sure. We're not doing diagonals, we're doing straight time spreads. KK says, what deltas are these trades placed at typically? That we do the closest to the money. Now there's a little bit of nuance to there, and sometimes we're gonna do the call spread, sometimes we're gonna do the put spread, sometimes we're gonna let it lean a little bit to the upside, but generally speaking, we're doing the closest to the money, closest to the money. So it is crunch time. Sherry, I know, has got to go. She was gracious enough to let me keep talking, to give everyone the opportunity to join us. And so we're going to wrap up here in just a couple of minutes. This is your last chance to join us.
Hey,
Again,
Dan, can you double check your link?
markettaker.com/TED. Well, I mean, we've got a bunch of people who signed up. So
Yep, okay.
Scott, there's two T's in a row. There's 2 T's in a row, Scott. A lot of people make that mistake. And here, I'm going to type it here. I'm going to type it right here for you, Scott. markettaker.com/TED. And I'm actually going to send it
right up for me
yeah.
too.
Oh, cool. Yeah, you should, Scott, you should just be able to click on that now. And,
He's got it.
And it should go through. Yeah.
And George is saying he needs to update his card.
George, oh, I see at least one George who just joined us.
Cool.
Yeah,
Awesome.
George, did yours go through? Did you? It looks like yours might have gone through, George. Double check. If not, maybe I'm getting. Oh, it is. Well, I'll tell you what, George. Email Kathleen, and she'll take care of you. Oops. I'm going to send that just to you. If there's any problem, she'll be able to take care of you. Oh, Scott says it's working now. Good, Scott. Yeah, you know, sometimes, Scott, when there's a whole bunch of people all going to a website at once, sometimes you have a hard time getting in. And so, man, welcome everybody. I am so thrilled that so many of you saw this opportunity and decided to make it happen for yourselves. You know, like that is on you. You know, you stepped up and decided to invest in yourself today. That's not something I can do for you. You know, I never twist anybody's arms. And that's why, by the way, that's why I offer, you know, before when I said, is there a limit on the number of students who can join? Yeah, I mean, we have to limit it to 50 people because otherwise, you know, it gets out of hand. I want to give you my full attention. But this bonus here, I'm going to tell you the truth. I actually don't have to limit this. I mean, I have to. I don't want 1,000 people in the class because if I do, then it's the same problem. But this one I limit for a certain reason. You know why I limit this? Because I only want people who see opportunities and attack. You know, I want the hunters, not the gatherers. I want the people who, when they see a great opportunity, they make the choice to make it happen, because you are the ones who will be great traders with this system or with any other system. And so I make it so that people who can make smart decisions very fast, who recognize value, I encourage you, you know, and this is that encouragement. And I not only do I encourage you, but I reward you, because if I'm going to create 1,000 success stories, I want the ones who are ready. I want the ones who are ready, who are sick of losing money, who have gotten to that point, who have lost enough money. Because look, some traders don't sign up for a class until they have lost enough money. And I understand that. That's what happened to me in my own business, you know, like I just kept thinking I could do it myself. You know, I'm one of those people who likes to figure things out. I thought I could do it myself. And and when I finally got so frustrated and got so frustrated by not being able to help that as many people as I wanted to, I looked for a better way. And so those are the people who I'm rewarding with this action taker bonus. Those are the people who I'm rewarding with this action taker bonus. And that's why I give that only to a subset of people, only to the people who step up and really make it happen. So that is everything we have for today. This is crunch time. If you're ready to make it happen, you've got literally just enough time to make it happen, because our first live class is on Monday, October 26th at 3:30 Central Time, Money Week, where we're making our trades together. But you're going to need to be prepared. So simply go to markettaker.com/TED and join us. And again, welcome to all the folks who did step up and invest in yourselves. Those of you who didn't, or who maybe you didn't get frustrated enough yet with trading, you haven't lost enough money yet, you're just not there yet. That's okay. One day maybe you will be, or if earnings isn't your thing, that's okay too. But I hope that I provided a great deal of value for everyone here today, and I can't wait to provide a whole bunch more value for all the folks who joined us today. Thank you so much for spending your time with me. I really appreciate that. Thank you. Have a great day. Trade well.
And thank you everybody for joining us. I'm going to just put up my screen one more time. I want to remind you that we have, and thank you, Dan. I think that was a great presentation, and we really enjoyed it.
Thanks, Sherry.
Now, if you guys can see my screen, I just want to tell you about how to get this recording later on. It'll be up either later today or in the morning at the latest. You go to tradersexclusive.com, and I have the direct link there. But when you're on our page, you go to tradersexclusive.com, and just on the right-hand side of the screen, you'll see a place that says Trader Education Webinars. And when you click on that, then you can see our list of the upcoming webinars, and you can also at the bottom of that list see check out past Traders Exclusive webinars here. Just click that link and you'll be able to find this webinar as well as all of our others. I want to thank you very much for staying with us, and hope we'll see you again soon. And again, as Dan said, trade well. Bye-bye now.